So very good morning to everyone. Definitely. Okay. So anyway, when it come to yesterday class, we finished the concept of ABC, right? Now when it come to today discussion, just in time. In newly issued ICMA workbook, they created one new problem based on working capital. There is a 95% probability for this attempt. Guess. Okay. As per, yeah, Akshay, hi. So as per yesterday prediction, from last two attempts, they asked a question from ABC. That's why we estimated for next attempt also they can there is a chance for ABC, right? But when it come to this new workbook, they create a new problem. It's not there in our entire ICMA sources based on working capital. So there is a chance to try that kind of new concepts. Why? Because in just in time we will learn only on costing point of view. Only we will learn on costing point of view. But that is a problem. It's a combination of just in time and working capital. So I hope you already know the concept of working capital estimation, current asset list and current liability list. You have to calculate that current asset list and current liability list. You will get a stock values. Based on the stock values, they are asking cost analysis. Okay, we will discuss that problem also today. Anyway, chapter 4.2. Just in time. G. Mahesh Naidu, hi sir. Hi Ghosh, good morning. Okay. So this entire concept I will explain in a single example. You will get clarity regarding to the concept. Then we can solve easily problems. Problems are very easy, cost benefit analysis. They will give list of cost transactions, list of benefit transactions. You have to do cost benefit analysis. That's about the just in time problems. But if you understand the concept, then you can easily answer that kind of questions. Why? Because we need some more clarity regarding to some points like capital asset transactions, depreciation related adjustments, that kind of things we have to understand. Okay, first understand the example. Forgot about the name called just in time. It is a topic relating to production of a product. Here our product is car. Are you clear? Now, when it comes to the market, pull system and push system. Two types of systems is there. Can anyone know the meaning of pull system and push system? Pull system and push system. At the time of manufacturing of a product, you have to check these two words. Now the meaning of pull system means demand based production. Demand based production. First we will create a product, we will give two samples, automatically the demand will be created for the product. After demand creation, we will start a production. That kind of system is known as pull system. This is also be known as customer demand based system. Clear? So without demand, without forecasting, we can't do anything. With pure numbers, customer need this much of units. That is called a pull system. But when it comes to push system, this is called mass production based on forecasting. Based on forecasting. What is the difference between pull and push? Forecasting, demand, both are same only, na? There is a chapter name called demand forecasting. based on actual figures. If you start the production, that is called pull system. Based on estimated figures, I don't know the reality, I know only forecasting or estimation. Based on that estimated units, if I start the production, that is called push system. Now the pull system is applicable to just in time concept. This push system applicable to traditional production. If we understand this, then only we can start our concept. Pull system and push system. Now here is a topic of what? Pull system. If I have demand, then only I will start what? Production. Okay. Now name itself saying that just in time. Just in time. What is meant by just in time? As per dictionary meaning. Based on requirement only, we will do something. The word is production I used. That's why the something is nothing but production. Are you clear? If you want a production, you have to purchase raw material, you have to do work in progress, you have to do finished good. After finished good only, you have to sell that good to customer. In this entire process, there is a time period is involved. Time period is involved. Now, because of the time period, we have a lot of disadvantages. Now, with help of this just in time, we have to reduce the time. If the time reduces, your cost also reduces. That is the overview soul of the just in time concept. Are you okay? Now, for manufacturing of that Fortuner, the assumption it is a pull system based. If we want to manufacture, first we have to procure money or invest the money. If you want to start production, do you have money or you have to invest the money first? You need to procure the money. Are you clear? I procured a money 150 lakh rupees. Out of that 150 lakhs, 100 lakhs I used for manufacturing of the plant and machinery factory. The 50 lakhs I used for working capital. I used for what? Working capital. Now this 100 lakhs I will recover in long run. But that 50 lakhs I need to recover within the year. That is the meaning of working capital. Yes or no? Okay then. He took a loan of 50 lakhs for the purpose of what? Working capital. After procuring money, he will invest. Invest on what? Invest on what? I'm not talking about 100 lakhs. I'm talking about 50 lakhs. That 50 lakh investment done on raw materials, labor. Yes or no? No. Now, I want to purchase raw material. For manufacturing of that car, how many types of raw material is needed? Single raw material is sufficient. Multiple raw materials is needed. For example, 20 raw materials. Raw materials. My question, can I purchase all raw material at a time? It's not possible. Now, for 20 raw material, 2 raw materials came at first day. 10 raw material came at 15th day. 2 raw material came at 25th day. And 1 raw material came at 31st day. And last raw material came at second month ending. Now, without all raw material, can I start conversion process? Yes or no? No. Okay. How many days it will take to procure that all raw materials? 2 months. If it is a 2 months means, what about that first day raw material? We have to put on stores room. Not warehouse is not a right word. Warehouse talks about finished good. Raw material talks about stores room. Okay. What about that 15th day raw materials? We have to keep at stores. Yes or no? No. If you are keeping at stores means one cost is incurring, carrying cost. Are you okay? Okay, then fine. After 2 months, all raw material came into our storeroom. Now I sent it to work in progress. Now tell me, for manufacturing of one car, how many days it will take on an average basis? 1 day? 1 day. For manufacturing of entire one car? 2 days? The minimum it will take on an average basis 1 month. Okay. After working progress, what happened? Finished goodwill came. Finished goodwill came. Now, if it is a pull system, after completion, after getting the finished good, you will directly transfer to the customer. But if you follow push system, what happen? You have to wait. You have to wait up to demand creation in the market. Up to that time, you have to store that finished goods. No? Where you will store? Warehouse. How many days it will take? I can't say. For example, 3 months time period. Now, after 3 months, few cars I will transfer to showrooms. I will transfer to showrooms for display purpose. Here it will take 1 month time period. After 1 month, customer interested to purchase our product. Now, amount of cash when we realize, amount of cash when we realize. We invested 50 lakhs rupees on car manufacturing. That amount when it realize? Within the day or within the month or within the 2 months? How many days it will take? 2, 1, 3, 1. How many days it will take, 7 months it will take. Can I name it? Is called working capital blockage. Why working capital blocked here? Why working capital blocked here? Because of time. Because of time. Now the 2 months time waste because of raw material. I want 20 raw material. If I placed order at a time, they send it also same month only. 1 month saves. Are you clear? Now when it comes to working progress, I can't do anything 1 month. But when it comes to the finished good, don't focus on push system, go with the pull system. Are you clear? At that time, what happened? I can save this 3 months of warehouse holding period. After completion of the finished good, within few days, I will transfer to the customer. Now that that showroom time period of 1 month also saves. Now because how many days we saves because of push system, pull system? 1 month in raw material, 3 months in finished good, 1 month in showroom. 4 months. For 4 months, can I reduce my carrying cost? Yes or no? Now, first, please identify the issues in this example. What is the issues in the example? Now, this 50 lakhs is there, Nama. Own funds or loan funds? Loan funds. You have to bear interest. Because of 7 months, your interest is blocked. You can pay, you can't pay. You can't pay. For that, you have to take another loan. Okay. Because of time, carrying cost is increased. Because of time, what cost is increased? Carrying cost is increased. First problem. Working capital blocked. Second problem, identify can't pay interest. The third problem, carrying cost increased or decreased, Increased. Are you okay now? Now, because of all these things, your cost what happened, If cost increases, business have two issues. Either you have to reduce your profit, or either you have to increase your selling price. Sir, increasing of selling price advantage only, no? Increasing of selling price advantage only, no? Then why you are saying disadvantage? No, it is not a advantage. Because of there is a competitive advantage. Competitors is there in the market. If you increase your selling price, but they will continue with their own price with high profits. Your customers also shifted to your competitor. Guys, clear? That are the disadvantages we identified because of what system? Push system. Are you okay, so? Now, for these problems, we have to create a solutions. Now the solutions are created by Toyota company. Now the just-in-time concept created by Toyota. Are you clear, sir? For the solutions of the negatives is nothing but just-in-time. Now, okay, then fine. So if you need not to block working capital, what is the remedy? So when it comes to I need to maintain a clarity. So there is a no blockage of working capital. For that, what is the remedy? Please take advances from the customer. If you take advances from the customer, what happen? Working capital will not block. If working capital will not block means you can't wait for interest payment. Guys, clear? Okay. Now the first solution, take advances from customer. Take advances from customer. Due to that, working capital will not block. There is a no interest burden. Okay. For carrying cost purpose, what is the solution you have? You have to reduce that carrying cost. For that, what is the solution you have? You have to purchase raw material when it is required, when it is needed. Don't purchase bulk quantities. If you purchase bulk quantities, you have to store. If you have a required quantity, you can directly send it to work in progress room. Good will finish. Yes or no? Then already you taken advances. Customer will not wait. Customer will not wait. They will ask every time when it will come, when it will come. Then hand out that good after finished goods completion. Clear? Now, for that purpose, reduce time. Due to reduce time, what happened? How can I reduce the time? Purchase raw material or components when it required and quantity of required. Are you guys clear? Next, follow pull system. What is a pull system? Customer based demand production. If you follow pull system, they will pay advances. After completion of the finished good, you can hand over. There is a reduction of time of what? Finished good holding period. There is a reduction of time of showroom holding period. Hope you guys clear? This is a concept of just in time. For problem solutions is nothing but just in time. Are you okay? Now see, because of all these reasons, your cost what happen? Decreases. If it is a cost decreases, you have a two advantages. You can increase your profit percentage. Yes or no? Now you can reduce your selling price with help of maintaining constant profit. If you reducing selling price, same logic previous, customer had advantage, now you have advantage. Your competitor buyers will change it to your buyer. Why? Because the same product getting at a lower selling price in your hands. Now why the lower selling price means? Because of cost reduction. Why the cost reduction means? Because of reducing the time period. That is a concept of what? Just in time. Hope you guys clear? And the process of this, we have some cost, we have some benefits. Comparison of cost and benefit is nothing but just in time problems. Okay. So the soul of the concept, that's it, ma'am. Now let us check the definition part of the just in time. Just in time is a production and inventory management system where material components and products are produced or acquired only when they are needed and in the exact quantity required instead of keeping large stocks. Now let us break down this entire points. Here not only talks about raw material and components, it is also talks about production means output. The output talks about warehouse holding period. The raw material components talks about stores holding period. Are you guys clear? Now, example they given, a car manufacturer using just in time will not stock thousands of seats. Why they are not purchasing thousands of seats? Why? Because they are a car manufacturer. Na? There is a lot of reasons. They different car has a different seat designs. Are you clear? Because if they purchase thousands of car seats, what happen? Carrying cost will be increased. That's why when they need it, they will place a order. When they need it, they will place a order. That is a when it is needed. Are you clear? Quantity of required. Next one. Instead of the supplier deliver the seats daily or hourly as per production schedule. Due to that, stock holding period, what happened? Decrease. Decrease. Stock holding period, what happened? Decrease. If stock holding period decreases, carrying cost, what happened? Decreases. That is the advantages we have due to just in time. Next, key features of just in time. Let us check the key features. Zero or minimal inventory avoids storing excess raw material or finished goods. Pull system, you already know the meaning of pull system. Customer demand triggers production, not forecast. Next, continuous improvement. It is not a single time process. You have to do again and again. Then only the change will be happen. Focus on eliminating waste, defects and delays. So just in time says only about delays. But when come to the MCQ point of view, you have to focus on the two words. Delays as well as defects and waste. Why? Because if you following just in time, you have to provide quality good also. No? For that quality good purpose, you have to check what? Wastage and defects. Next one. Strong supplier relationship. Materials must arrive exactly on time. If the material is not came at on time, what happen? Our chain will be stopped. Our production chain will be stopped. Now in just in time also we have a disadvantage, that is nothing but if you relation maintained with only single supplier, it is a disadvantage. You have to maintain relation with multiple suppliers. Guys, clear? So what are the advantages because of multiple supplier? If one supplier not provides goods within that time, immediately you can place order with another supplier. Clear? Now that is the issue faced by Toyota in 2001 and 2005 situation. So they only maintained a relation with one supplier. That supplier is not provided raw material on time. The just in time is not works for the Toyota, even though they created. Are you okay? At that time they realized. So maintaining of relation with single customer, single supplier is not a good deal for my company. We need to maintain a relations with a lot of suppliers. Next one. Advantages. The positives is nothing but advantages. What are the advantages we have? Lowering inventory cost. That is nothing but carrying cost. Reduce waste and obsolescence. Why? Because we will focus on quality also. Faster response to customer demand. If you providing a good within on time delivery, it will create a goodwill. Next, improved. Why improved efficiency? It is a continuous process. Because of continuous process, efficiency what happen? increases. If efficiency increases, cost decrease. Next, disadvantage. See the disadvantage? Production can stop if there is a delay from suppliers or unexpected demand spike. What is unexpected demand spikes? Sometime auto demand will create. For example, Thor rocks. They planned for some, they are followed pull system only. They planned for 1 lakh units, but the demand created for 2,50,000 units. At that time, they can't do anything, even though they're following just in time. Clear now? So they're planning for just in time for only 1 lakh units. But what is the actual demand in the market? 2,50,000. Now see, this is a reality example. So what we discussed, this is the thing. Before just in time, after just in time. Now what happened before just in time? I took a loan of 100 lakhs for working capital at the rate of 10% of interest. Now lot of raw material is required for the purpose. The storage time period is 2 months. After that, I will send it to work in progress warehouse. It will take 1 month period to manufacturing the car. After that, there is a no demand. Why? Because of push system. 2 months it will, I hold it in the warehouse. After that, I will send it to showroom for 1 month. The total time period it will take 8 months to reach to the customer. When customer purchases only, my amount will be recovered. For my recovery of amount, it will take how many days? 8 months time period. For that 8 months time period, interest carrying cost will be increased. Insurance and stocks, that's the point I missed, sorry. Insurance and stocks. Why? Because you have to maintain an insurance na? In godowns. There is a chance of fire accidents, theft, etc. Now the insurance cost also increase because of time period. Okay, then fine. Due to that cost will be increased, I have a 2 disadvantages. My profit is losing as well as my selling price will be increasing. Okay, then fine. Now if you introduce the just-in-time concept, what happened? First, company will not take loans from the outside. They will take advances from the customer. Now because of advances from the customer as well as they're purchasing raw material when they need it, when they require the quantity. Okay, because of that, they reduces the holding period. It means raw material came to our gate, directly send it to the work in progress room. Now there is a no concept of storage room. Are you clear, ma? Next, in work in progress, it will take 1 month time period to manufacturing the car. After that, finished good holding period is also nil. Why? After work in progress, I will directly send it to the showroom. In showroom also, I will not hold more than 1 month. Within 2 or 3 days, I will hand over to the customer. Due to that, how many days it will take to collect the money? 1 month only. Because of 1 month, my interest burden, what happened? Decreases, and carrying cost also decreases. Insurance on stock decreases. Guys, clear? Now, another point you have to understand, you already know the capital budgeting decision. If you applying interest on, in our example, 100 plus 50, 100 for capital expenditure, 50 for working capital. Now the 100 lakhs interest is a long-term related interest calculation. This 10% interest, working capital interest is related to short-term interest related calculation. But whatever it may be, that interest is a finance cost. Interest is a what cost, ma? Finance cost. When it comes to carrying cost, incidence on stock is a product cost. Here you have to focus only on product cost, not on finance cost. Are you guys clear? Now the finance cost is related to long term. If it is a short term, you have to consider. Why? Because it's an opportunity. Opportunity cost. Are you guys okay? Next, ma. So this is a real example of Fortuner. This is a cost sheet of Fortuner. So the direct material cost is 15 lakhs. Direct labor 1 lakh 50. Direct expenses 50,000. Now the prime cost is 17 lakhs. Factory overhead, indirect labor 1 lakh 50,000. Depreciation 30,000 for plant and machinery. Now see the important thing. Carrying cost 20,000. With examples we can talk anything. Zero storing cost and zero finished goods cost. But when come to the reality, there is a minimal cost. Are you okay? The minimal cost is how much, ma? 20,000 per unit. Works cost and office salaries 50,000. Cost of production. So next they are doing advertising and freight charges, transportation charges. Now carrying cost for finished good 30,000 they are maintaining. Next, cost of sales you will get For that, on that cost of sales, we are adding markup as a manufacturer. That is called manufacturer markup. The minimum markup in the market 15%. So after adding the markup, you will get X factory price. You know X showroom price. It is not X showroom price, it is a X factory price. On that X factory price, you have to add GST. Now the new resume rate is 40%. Previously it is 28%. As per new updations, 40%. If you add 40% of GST, you will get X showroom price inclusive of GST. Are you clear? Even you will not get for that X showroom price. Why? Because showroom dealer margin is there, and transportation charges is there, and road transportation tax is there. If adding up all those things, you will get on road price. Now the on road price of mid-range Fortuner car is 41,20,000 rupees. Guys, clear? So why I take an example of this means because of this red highlighted areas. Carrying cost. Here we can, if you follow just in time, there is a chance for decreasing. But they are following just in time only, they are decreasing cost in reality. Are you okay, so? Now the special note points you have to understand, ma. Ignore capital cost. Why capital cost? It is relating to long term capital expenditure. Next, ignore depreciation. Ignore depreciation. For the ignoring, there is a two reasons. One is sometimes they are allocating on capital cost basis, and as well as it is a non-cash expenses. Non-cash expenses. Because of the two reasons, we are ignoring depreciation. Very, very important highlighted points. Next, open illustration number 10. Ma. This is about the concept of just in time. Out of 5 items, they are asked only one time, that to June 23. But they are not asked this kind of basic model. They ask some standard model. B Limited has decided to adopt just-in-time policy for materials. The following effects of just-in-time policy are identified. To implement just-in-time, the company has modified its production and material receipt facilities at capital cost of what, ma? 10 lakh. Can I consider? Can I ignore? Capital cost. Ignored. Capital expenditure. Okay. The new mission will require cash operating cost. Operating is talks about within the 1 year day-to-day activity. Now you have to consider as a cost. Next, the capital cost will be depreciated over 5 years. The depreciation charging on cost basis, capital cost basis, that's why ignored. Raw material stock holding will be reduces from 40 lakhs to 10 lakhs. 40 lakhs to 10 lakhs. What happened here? Advantage. Huh? How much is the advantage? 30 lakhs. Can I treat it as a benefit? No, wrong answer. Out of 30 lakhs, 30 lakh is not a benefit. Out of 30 lakhs, there is an opportunity save. 15%. That is a stock value, not expenses. It's not a cost. That is asset, current asset. Guys, clear? Next. And also, this 10 lakhs is there, Nama. Amount of 10 lakh is a cost, capital cost. But on that, you have to pay interest to every year, no? Every year. 15% of 10 lakhs is a cost. Next, The company can avoid rental expenditure on storage facility amounting to 33,000. Can I consider the entire 33,000 as a benefit? 33. Why? Because of just in time they're saving carrying cost. Next, property tax and insurance amounting 22,000 will be saved due to just in time program. Can I consider this entire 22 as a benefit? Next, present there are 7 workers in the store department at a salary of 5,000 each per month. After implementing just in time scheme, only 5 workers will required in this department. Balance 2 workers employment will be terminated. Now the termination of 2 employee money is nothing but cost save only, na? Cost save benefit. 2 into 5,000, no? 2 into 5,000, 2 into 5,000 into 12. Yeah, it's a 5,000 per month. 5,000 per month. So 2 workers, each person 5,000 per month. I want for 12 months. How much? 1,20,000. Due to receipt of smaller lots of raw material, there will be some disruption of production. The cost of stockouts are estimated at 77,000 per annum. Now, what is the meaning of stockouts? I said one point, disadvantage. If supplier not supplies within the time, there is a creation of stockout situation. Guys, clear? For that maintaining stockout situation, we have to provide benefits to customers. For the benefit, I spend at 77,000. Benefit to customer for my company, it's a cost. Guys, clear? Now, if you prepare a statement, cost list and the benefit list, problem is over. Now, problem number 10. Huh? What's the requirement they're asking? Determine the financial impact of just-in-time policy. It is advisable for a company to implement just-in-time system. So student will solve, they will leave that solution. But here is the 2 questions is there. This is the second question. You have to say comment. It is advisable or not. Okay. If it's a strict valuationer, they will cut 2 or 3 marks for that last 1 sentence comment. Why? Because you are not doing anything here. Even 10th class student will do for this cost benefit analysis. But you are a final student. Clear, no? You have to take a decisions. You took a decision, okay. Where it is, you have to say, no? Now. Cost benefit analysis. If company follows what more? Just in time policy. Now please list out the benefits first. Cost saving due to stocks. Cost saving due to stock. How much cost saving? What's the calculation? 30 lakh stocks are reduced. On that 15% amount we saved. This is called opportunity cost saving. How much more? 4,50,000. What's the next benefit we identified? Rental expenses. Cost saving on rental expenses. Amount please? 33,000. Cost saving on property tax. Property tax and insurance. Now, amount please? 20,000, huh? 22,000. What next? Cost saving on salary. Worker salary. 2 workers, 5,000 into 12. 1,20,000. These are the advantages we have. Huh? Now, benefit, please. Total benefit. What more? Cost you have to pay. For that amount of loan, you have to pay cost, interest. Now what more? 6,25,000. Now list out the cost, ma. Opportunity cost 10 lakh. What's the calculation of opportunity cost? Operating cost is not opportunity cost. Operating cash cost. Amount, please. 1,08,000. Opportunity cost 10 lakh into 15%. 1,50,000. Next, stock out cost. Cost relating to stock out situation. Amount, ma? 77,000. Any other cost is there, ma? Now total, please. What? 3,35,000. Total cost. Now the third step is net benefit. Total benefit minus total cost. What about the total benefit? 6,25,000. 3,35,000. Answer? 2,90,000. Okay. Now, comment is important. What is the comment? Just-in-time policy is financially viable for organization name is given. What more? P Limited. Any doubts here? Okay. Come to the question number 11. Before that question number 11, past paper June 25 question. That is simpler than that question. It is a very difficult one. But it is not a 7 marks worth question of question number 2. It is a 14 marks worth question. That's why they created new question in June 23 based on that points. Now read the question. Procurement of information is important. It's just a material problem. In your inter you learned material chapter problems, no? That's the problem it is. So if you want to solve this problem, first you have to understand how to calculate purchase cost. How to calculate purchase cost? Annual demand into purchase cost per unit. Now how to calculate order cost? Number of orders into order cost. Now how you get a number of orders? Annual demand divided by order size. Okay. Now when it comes to carrying cost, how to calculate carrying cost? half of the order size into carrying cost per unit per annum. Are you okay? Half of the order size into carrying cost per unit per annum. This is basic stuff of material chapter. Okay. Now just you have to calculate purchase cost, ordering cost, carrying cost, if any other specific cost for existing policy. Okay. Same logic for as per just in time or proposed policy. Now end of the product you will get total cost of 2 existing policy and just in time policy, then say decision. Here it is not a cost benefit analysis, it is a cost analysis. Okay, read the question now. P Limited, a video company, sells package of blank video tapes to its customer. It is purchasing video tapes from V company at 40 a packet. Can I name this called purchase price per unit? Now write in the given information, then you can easily solve. Next, V company pays all freight to P Limited. No incoming inspection is necessary because of V company has superb reputation for a delivery of quality units or raw material. So because of that, one cost we are saving, inspection cost. There is no inspection means there is no inspection cost. Are you clear? Okay, then fine. So when, if as a manufacturer, if I order some quantity from supplier, I will send one person to inspect the raw material. Guys, clear? I need not to send here. Why? Because they are maintaining a quality standards. That's it. Next, annual demand of a P Limited is how many packages, ma? 13,000 packages. Can I name it is called A? Annual demand. P Limited require 15% annual return on investment. 15% annual return investment. Now when it come to, if you want to start production, you have to invest money, na? On that money, they're minimum expecting how much? 11%. Next, the purchase order lead time is 2 weeks. The purchase order is passed through internet and it costs rupees 3 per order. Ordering cost per order. The relevant insurance and material handling etc. 5.10 per package per year. Can I name it is called carrying cost per unit per annum? Carrying cost per unit per annum. Next, P Limited has decided whether or not to shift it to just-in-time purchasing. V company agreed to deliver 100 packages of video tapes in 130 times per year, 5 times every 2 weeks, instead of existing delivery system of 1000 packages 13 times. Now they specifying, they are confusing about existing policy and just in time. What are the things they provided related to the just in time? If you opt just in time, they will send 100 packages in 130 times when it is required. But when it comes to the existing policy, they will send 100 packages in 13 times. What happened? Because of bulk quantity, you have to maintain a store. Do you understand the logic here? What is the existing policy packages? 1000 packages. How many times? 13 times. Now 1000 packages is known as order size. 13 is known as order times. Number of orders are 13. Order size is 1000. As per just in time, 100 is a order size. How many orders? 130 orders. Ordering cost per unit is there. Number of orders is there. We can do. Next, with additional amount of 0.5 per package. Now what is the meaning for additional amount of 0.5 package? For existing policy, the purchase price per unit 140 rupees. If you want just in time, you have to pay purchase cost how much? 140 plus 0.5 rupees. 140.5 rupees purchase price. That is the meaning of the 0.5 per package. Next one. P Limited incur no stock out under its 50 current purchasing policy. Current purchasing policy. 50 is a wrong word here. Remove this. It's current purchasing policy. Wrongly printed that 50. It is estimated P Limited incurred stock out cost on video tape package under just-in-time purchasing policy. In the event of stock out, P Limited has a rush order tape package which cost 4 rupees per package. Now existing policy, there is a no stock out situation. If you follow just-in-time policy, there is a stock out situation. That stock out situation also what they said ma? Order tape packages into 4 rupees. Now the stock out cost per unit equals to 4 rupees. Now all information is available. We have to prepare a statement. Now what's the problem number? What is the requirement? Assess the information as stated. Supra and advise P Limited as to whether it should implement just-in-time purchasing system or not. So you are the cost accountant. Your name is Supra. So you have to say decision to P Limited. Are you okay? Statement showing comparison of existing policy and just-in-time policy for P Limited. Particulars, existing policy, just-in-time policy. What is the first cost you identified, ma? What is the first cost you identified? Purchase cost. Now tell me the purchasing cost calculation. Annual demand. Annual demand how much? Purchase price per unit. 13,000 into 140. Amount please. 18 lakh 20,000. Next. Carrying cost or ordering cost? Ordering cost. What is the calculation for ordering cost? Number of orders into ordering cost per unit. Now what is the number of orders? 13,000 divided by 1,000 into ordering cost per order we already identified. How much? 3 rupees. Now the answer. They provided 13 orders. You can take directly also. But understanding purpose for formula I am writing. What ma? 13 into 3. Rupees 39. Next ma. Carrying cost. Carrying cost calculation. Half of the order size. Carrying cost per unit per annum. Half of the order size. 1,000 divided by 2. into carrying cost 5.1 na? Now the answer 2550. Okay, next inspection cost nilla. Next stock out cost amount please. What ma? Nil only. Existing policy, purchasing policy nil. Existing policy is nothing but present purchasing policy. Next opportunity cost is there. Opportunity cost 15% amount of investment. Now please tell me the amount of investment. Read the question and tell me amount of investment. Anyone? Nilla. Amount of investment. Amount of investment is not given in the question in rupees point of view. What's the purchase value? 18 lakh into 15%. 2 lakh. Amount please. 2 lakh 73,000 into 15%. Okay. What about the purchase value? 18 lakh 20,000 into 15%. Answer 2 lakh 73,000. Now this is a cost. Now when it comes to just-in-time policy, annual demand 30,000 units into purchase price will increase, sir. Now purchase price how much increases, ma? 2.140.5. Now the answer of rupees 18 lakh 26,500. Next, when it comes to the ordering cost, ma, number of orders will change here. Annual demand divided by order size. What is order size? 100 into 3 rupees only. 390. When it comes to the carrying cost, half of the order size, 100 divided by 2 into 5.1. Answer 250. Now here also there is a no inspection. Supplier is a quality maintainer. Now stock out cost is there ma, 4 rupees into 50, the number is there now, defects units sir, that is, yeah sir, that number considered sir, defect units they are. Now see here, we removed here, incur no stock out under its 50 units. If they mention units, we will get a clarity. Because of that one, we missed that. Now 50 units into 4 rupees, stock out situation units, 200 200. Now here 18,26,000 into 15%. 73,000. Total please. Twenty-one lakh. 21 lakh. Just in time. 21 lakh. 1,240. Here. $245. When it come to here, existing policy, 20 lakh 95,589. Here we followed an assumption, opportunity cost, we calculated an investment of purchase, right? Yes or no? But when come to the question, there is a not discussed of rupees of investment. Okay. Now if you need to confuse about that point, go with an assumption. Go with the assumption. So when it come to, there is a no investment value, that's why calculation of opportunity cost is not possible. Okay, here is assumption we followed, that the amount of investment is nothing but purchase value of the stock. Clear? You have to mention clearly. So June 23 question paper questions is not expect that much of clarity answers. Are you okay, sir? So this is about June 23 question paper question answer. Now the only issue with is what ma? Opportunity cost calculation. Next. Come to the problem number 11. Here it involves 3 situations ma. Not single situation, 3 situations. That's why it's a complicate. When it come to that exam oriented question, how many situations we have? 2 situations. Purchasing our existing policy, just in time. But when it come to in this situation, existing policy with just in time of one supplier, next just in policy with second supplier. 3 situations is there. Read the question, you will get a clarity. Highlight the numerical values. Ultra Video company sells package of blank video tapes to its customer. It purchases video tapes for Yes Tape company at 150 per packet. Same as previous one, but one situation added extra. That's it. Now, S-tape company pays all freight to Ultra Video company. No incoming inspection is necessary because S-tape company has a superb reputation for delivery of quality goods. Okay. Now, annual demand of Ultra Video company is 15,600 packages. Ultra Video company require 10% annual return on its investment. The purchase order lead to 2 weeks. The purchase order is passed through internet and its cost 20 rupees. Ordering cost per order. The relevant insurance material handling cost 10 rupees per package per year. Carrying cost. Ultra Video has to decide whether or not to shift just-in-time purchasing. S-tape company agree to deliver 100 packages of video tapes at 156 times. 6 times every 2 weeks. Instead of existing delivery system, 1200 packages 13 times a year with additional amount of rupees 0.05. This is called just-in-time policy. Ultra Video company incurred no stock out under its current purchasing policy. It is estimated that Ultra Video company will incur stock out cost on 50 videotape packages under just-in-time purchasing policy. There is a stock out situation in which policy? Just-in-time policy. In the event of stock out, Ultra Video company has to rush order tape packages which cost 8 rupees. What is that 8 rupees? Stock out cost per unit. Comment whether Ultra Video company should implement just-in-time purchasing system. Up to here, question 1. But student will continue the question. If he knows this is the first stopping point, then he can easily solve a problem. But if he start with it is in a continuing information of down one, they will confuse. Are you guys clear? Now the question 1 is completed. Please solve for that. Okay, then fine. Next, when it comes to question 2. RAM company also supplies video tapes. It agrees to supply at 145 per unit under just-in-time delivery system. If videotape is purchased from Ramco, relevant carrying cost would be 9 per package against 10. Previously it is 10 rupees, now it is 9 rupees. Purchasing from S-tape company. However, RAM company does not enjoying sterling reputation for quality. Ultra Video company anticipate the following negative aspects of purchasing tapes from RAM company. Incurring additional inspection cost 0.05 per package. Here is the inspection cost is there in case 2. Average stock out 360 tapes package per year would occur, largely resulting from late deliveries. RAM company can't rush order at a short notice. Ultra Video company anticipate lost contribution margin per package is 10 rupees. Lost margin is nothing but opportunity cost. Next, customer would like to return 2% of all packages due to poor quality of a tape, and to handle this return an additional cost of 25 package would be incurred. Now it means I sold units and that 2% return on the 2% units into 25 rupees is a sales returns cost. Okay, next, comment on whether the Ultra Video company can place an order with a RAM company. So two situations is there, existing or just in time with no. Yes. First supply is yes. Is good or bad is the first question. The second one, the just not comparison. Just in time with RAM is good or not is the best second question. Now you can observe I clearly mentioned a blueprint for that problem. So what is the demand for Ultra company? 15,600 units. They need to transfer to whom? Customer. Now they have an option to yes. Yes or no, sir? Now first, the given information relating to all. by our existing policy for few. Now purchasing per unit for what policy ma? Existing policy. Yeah? Next, opportunity cost 10% for all. If investment is involved, you have to consider that opportunity cost. Huh? This is for all. Ordering cost, existing policy and just in time with yes. For RAM, 9 rupees. Carrying cost, no? Sorry. This is for all. I felt it is a carrying cost. Now when it comes to the carrying cost, this 10 rupees only for existing policy and just in time with yes. Why? What about RAM? 9 rupees they specified. Now existing policy with yes, just in time with yes, and just in time with RAM. 3 scenarios. Now when it comes to the just in existing policy with yes, 1000 units, how many times? 13 times. Purchase price per unit 150. Existing policy. Next, no stock out situation. Because of no stock out situation, there is a no cost. Okay. Next, when it comes to just in time with yes, how many units they are delivering? 100 units. How many times? 156 times. Purchase price per unit will be changes. Existing 150, the new thing is 150.05. There is a stock out situation. What is the stock out cost here? 50 units per unit 8 rupees, 400 rupees total calculation. Next, just in time with RAM, purchase price per unit, they offered a discount price 145 rupees. Carrying cost per unit per annum 9. Ordering cost same as above. Next, opportunity cost per unit per annum 10%. Inspection cost is involved 0.05. Next, stock out cost is there. Next, sales returns cost is there. Now if you have this blueprint, you can easily answer that question. Okay, so now computation of total cost before and after just in time for ultra limited with yes. Add this word with yes. Now annual demand 15,600. Purchase cost here 150, here 150.05. Carrying cost, number of orders 13, number of orders 156 into ordering cost. Carrying cost half of the order size 1200 is the order size. Half. Now the carrying cost calculation is involved 150 rupees and the 10% is the only carrying cost per unit per annum. It is not total. See, Ultra Video company required 10%. Sorry, there is 10% annual return, right? The relevant insurance and material handling etc. is 10 rupees per package per year. Now when it come to here, they provide carrying cost list. Here carrying cost are two. One is this relevant insurance and material handling, and another one they specified here. So highlighted that another 10% here. Yeah. This is 10% only they consider. The 10% annual return on its investment. Now this 10% investment per unit, how much? 150 rupees only, no? 150 rupees into 10%, how much? 15. This is the opportunity cost I lost because of carrying. Do you understand the logic? Because of carrying of stock, I am losing 15 rupees. That's why you have to list out that specially. Put a star for this carrying cost. Here, I think here I mentioned clearly. You can observe. Are you got it, ma? Due to carrying of stock, I'm paying cost of 10%. I'm losing. That is nothing but opportunity cost. Here, carrying cost means opportunity cost as well as insurance. Two list is there. See, this kind of calculation there in inter also, ma. So they will give on a carrying cost in percentage mode. If they given a percentage mode, we will multiply with the purchase price. Are you clear? Now when it comes to in carrying cost, two things is there. Opportunity cost is there. Insurance and material handling is there. Now when it comes to opportunity cost calculation, half of the order size into carrying cost per unit per annum. How you get carrying cost per unit per annum? Purchase price into percentage of opportunity. Next, insurance and material handling is given. When it comes to insurance and material handling, they mention clearly percentage or rupees. Insurance and material handling, rupees per annum. Rupees per annum. How much rupees per annum? 10 rupees per annum. But before that, you have to multiply with half of the order size. Now half of the order size is 600. 600 to 10, 6,000. Stock out cost. Stock out cost. Existing. Nil. Now when it comes to the just-in-time policy. Purchase price changes 150.05. When it comes to ordering cost, number of orders changes. How many orders? 156 orders. Ordering cost not changes, na? 20 rupees. Now when it comes to the carrying cost, half of the order size into carrying cost per unit per annum. Here they not mention rupees, they mention percentage. If they mention percentage, how to calculate? Purchase price into percentage. Are you okay? Insurance and material handling, half of the order size into 10 rupees. I think there is a stock out situation. Now stock out cost also is there, 400. Are you clear, ma? Now the answer, 23,55,260, 23,45,550. Ma, in problem June 23, we did a wrong calculation here. Now here you have to add opportunity cost. Now opportunity cost, please. Half of the order size into carrying cost per unit per annum, they given in percentage. Now when it comes to 500 is half of the order size into purchase price 140 into what is the percentage given in June 23? Same percentage, I think 10%, 15%. Okay, 10,500. Yes, this is the right one. This is the wrong one. Now when it comes to here, 500 into 140.5 into 15%. $10,000. Now you will get an answer. So we think that opportunity cost based on the concept of investment. Here the purchase price is investment only, but that opportunity cost arises because of the reason due to carrying the inventory. Are you clear? The interpretation we taken wrongly, that's it. That's why the answer is wrong. Okay. Now this is a wrong interpretation. What is the right interpretation? What is the percentage they given as an opportunity cost that is related to carrying the stock? Now please tell me the answer, ma. 18 lakh 28,398. When it come to here, ma, this answer, that is 18 lakh 28,398 for just in time policy. What about the existing, ma? 18 lakh 33,000. What, ma? 089. Now what's your decision, ma? Choose. Okay. Now that's a clarity. Now when it come to here, 23 lakh 55,260, 23 lakh 45,550. Now in which area cost is less? Just in time only, no? Now don't choose existing, choose just in time with yes. Both to yes only. Existing policy also yes, and just in time also yes. What is the difference? In existing policy, ordering is different. We are ordering bulk. When it comes to just in time, in just in time we are ordering required units. Are you got it, the logic, ma? Next, when it comes to the RAM, when it comes to RAM, purchase cost, please. Annual demand into purchase price per unit. How much, ma? 22 lakh 62,000. Next, ordering cost. Number of orders given in the order 156 into 20, 3,120. Next, when come to the carrying cost, 2 is there, percentage of cost is there, rupees of cost is there. When it comes to the percentage of cost is nothing but opportunity cost. Half of the order size into carrying cost per unit, purchase price into 10%. Half of the order size, insurance and material handling 9 rupees. Very, very important. Previously with RAM 10 rupees. Previously with Yesh 10 rupees, with RAM 9 rupees. Now the carrying cost is 725 plus 450. Inspection cost is there. What's the inspection cost here? How many goods you are inspecting? Total demand goods only, no? Now per unit 0.05, total units 15,600. Inspection cost 780. Now stock out situation units 360 units, 1 unit 10 rupees. Sales returns, I sold entire demand 15,600 units. Out of that 2% return back. For unit 7,800. Now please total it. $22 lakh 78,475. Now compare with just in time with RAM Yesh 23 lakh, but with Yesh with RAM 22 lakhs. Now which one is the best one? So put a relation with RAM for existing policy or just in time policy. For just in time policy. Why? Because already just in time policy is a good thing. Now this just in policy better than that just in time policy. Are you okay? That's you have to mention. See, The only difficult thing here, carrying cost calculation, that is not, it's a concept involved. The percentage of amount involved is nothing but what ma? Due to carrying the stock. Okay. Next. How many of you know working capital, ma? Working capital. So if interviewer ask a question, what is meant by working capital? What you say? If you say current asset minus current liability, they will give 50 lakhs package per annum. The current asset minus current liability is a calculation, not a meaning. That's the basic things we don't know in interviews. Very clear? The amount involved in day-to-day activity for doing a smooth run of the business is known as working capital. Are you guys clear? In day-to-day business, we are facing lot of issues. For solving that, if you not solve that issue, your production will continue, will close. It's not a smooth running of business. If you wanna continue the business, means you have to maintain some cash to solve that problems. That cash is nothing but what? Working capital. This is a way to express a definition of working capital. I faced this same question in interview. Okay, when it comes to how to calculate working capital. Okay, current assets minus current liability. It's an individual thing. Is current assets is an individual thing. It's a combination of stock, debtors, cash, prepaid expenses. But when it comes to the working capital, we need to discuss some more clearly. Here stock is not a single definition. Stock is a three definition. Stock of raw material, stock of work in progress, stock of finished goods. Stock, debtors includes bills receivable. Cash and cash equivalents includes bank balance. Prepaid expenses. When it comes to the stock, stock of raw material, stock of finished good, stock of work in progress, stock of finished good. When it comes to the current liability list, creditor includes bills payable, bank overdraft. Next, what expense? Outstanding expense. Outstanding expense. Clear, ma? Now, when it comes to the working capital maintenance, these are the areas there is a chance of issues. Okay. If there is a no stock, then it creates a stock out situation. If there is a no stock of raw material, what is the issue? Stock out situation. Yes or no? Why stock out situation? Because of there is a no raw material, I can't producing a commodity. That's why I am not meeting a customer need. That is called stock out situation. Now, if I have a cash in my hand, if one supplier is not supplied, then what I need to, then what I do? I will purchase with another supplier. If I don't have a cash, means I can't buy. Are you guys clear? For a solving of that stock out situation, you have to maintain stock. For a maintenance of stock, you have to carry some amount. Okay. Now that is the amount we have to figure out. How much amount I need to maintain for stock of raw material issues. Okay. Now when it come to in stock of work in progress also issues will arise. In stock of work in progress also issues will arise. Huh? Yes, issues will arise. What are the issues? What are the issues will arise in work in progress? Labor will not come today. He said cyclone. Are you clear? At that time we can't do anything. It is unavoidable or uncontrollable scenarios. I'm only talking about controllable scenarios. Are you clear? Now few set of labor are not coming. They're asking hikes and bonuses. Issue or not? Due to that issue, production will continue. Not continue. Production will be closed. But I need not to close, I need to continue. For the purpose I am maintaining cash. Either I will give bonus or hikes to there, or I will hire new people. For that purpose, how much I need to maintain. Are you guys clear? In working progress also I am using stock of raw material. In working progress there is a three issues. Stock of raw material issue is there, labor issue is there, and expenses issues is there. Electricity board cutting power. Yes or no? Issue or not? For solving that issue, I need to maintain some cash. Next, finished goods. Finished goods point of view issue will arise. Yes, in finished goods also raw material is involved, labor is involved, direct material is involved. If these three is involved means there is a issues. For the purpose of solving that finished good related issues, how much amount I need to maintain? That is our calculation. Next, when it comes to the debtors point of view, issues will there. Yes, issues will there. Debtor point of view, we will give some time. If they will not pay money within that time, my money is blocked in the debtor hands. I can't do production. I need to take another loan. Next, when it comes to cash and cash equivalent, there is not a topic here. Next, when it comes to the prepaid expenses, we paid in advance. It will not come. Opportunity cost loss only, no? Next, when it comes to these are the issues faced in current assets point of view, for the purpose how much amount I need to maintain is the calculation. Now let us check the calculation. ఎవరికైనా గుర్తొస్తుందా ఫార్ములాస్? గుర్తొస్తుందా? స్టాక్ ఆఫ్ రా మెటీరియల్ ఫార్ములా చెప్పవా? 7 మార్క్స్ మ్యాండేటరీ క్వశ్చన్ ఎఫ్ఎంలో. యావరేజ్ స్టాక్ ఇంటూ రా మెటీరియల్ హోల్డింగ్ పీరియడ్ డివైడెడ్ బై 12 months or 365 days or 52 weeks. Right, but not correct. Instead of average stock, you have to use raw material consumed during the year. Raw material consumed during the year or raw material purchase into raw material holding period divided by number of days in a year. You will get amount. That is amount for raw material issue solving purpose. Are you okay, sir? Sir, fix a point, sir. Attempt fix for this attempt, sir. That question will come. My gut feeling. Raw material value of stock of raw material. Value of stock of raw material. Raw material consumed during the year or raw material purchased in sometimes. If you have raw material consumed during the year, consider that. If you don't have that raw material consumed during the year, consider raw material purchase. My question, what is the difference between purchase and consumption? Opening plus purchase minus closing is known as consumption. Adjustment of stocks is known as consumption. Guys, clear? Now, into as per our example, what is the storage period? 2 months. It means I need to maintain for 2 months. I need to maintain for 2 months. This is the amount is per annum cost. Out of that cost, I have to maintain for required period. What is the required period? 2 months. Issues వస్తే ఆ 2 monthsలోనే కదా వస్తాయి. That's the meaning name called raw material holding period. The 2 months is there, na? That is called raw material holding period. What are the amount you calculated as a raw material consumed during the year? It related to 12 months. That's why I have to divide it with 12 months. Are you clear? Now you will get perfect 2 months required value. Next, very very important and understandable thing. Value of stock of working progress. Working progress we can't calculate directly. Why? Because in this working progress 3 elements are involved. Stock of raw material is involved, wages is involved, overhead is involved. Now see how to calculate stock of raw material. You already know the stock of raw material calculation. Now what is the stock of raw material calculation? Raw material consumed during the year into working progress holding period. That is the raw material relating to stores room. This is the raw material relating to working progress room. Are you clear? In stores room is 2 months holding period. Working progress 1 month. In our example. Yes or no, sir? Now working progress holding period divided by 12 months. Guys, clear? Next, when it comes to wages, wage cost into that wage cost is related to which period? Holding period of working progress. Working progress holding period divided by 12 months. Now overhead cost into working progress holding period divided by 12 months. Are you clear? Now the point will come into the picture. There is a industry norms. What ma? Industry norms. That industry norms saying that in working progress entire raw material not converted as a finished good. That entire raw material is not converted as a finished good. They will come, they will convert, they will come, they will convert. There is a process. Yes or no? That's why here don't consider total value. Consider only, sorry, wait. When it comes to the raw material point of view, it will convert fully as a finished good. It will fully convert as a finished good. Why? Because in storeroom to warehouse to finished good. All raw material converted. Na? That's why consider entire amount. That is nothing but 100%. But when it comes to labor's point of view, here we are using a concept of shift. 2 people will come, they will leave the production house. Another 2 people will come. It means we are not utilizing 100% of the labor. That's why consider only 50%. Consider only 50% of the answer. Next, when it comes to overhead, also same logic. Here we are not using 100%, just consider 50%. This is the industry norm. If they specify, not specify, you have to follow this. Even though there is not mentioned in the question, but when come to the working progress calculation, you have to use this logic. Sometimes they will use specification. What is the specification means? Material 75%, labor overhead 50%. Go with the specification. Sometimes raw material 100% they will give. This wages and overhead they will give 75%. Follow the specification. If there is a no specification, what is the industry norm? Raw material 100% you can take, but when come to the wages and overhead 50% only you have to take. Are you okay now? Now value of stock of finished good. Value of stock of finished good. Now here also stock is involved, wages is involved, overhead is involved. But 50% or 100%? 100%. Now stock of raw material. wages, overhead. What is the calculation of stock of raw material? Raw material consumed during the year into this raw material related into which period? Finished good holding period. Finished good holding period. In our example, 3 months is the finished good holding period. Guys, clear? Finished good holding period divided by 12 months. Wage cost into finished good holding period divided by 12 months. Working progress, overhead cost into finished good holding period divided by 12 months. Now what is the industry norm for this? Not industry norm, common sense. 100% completed. That's why you can take total values. For this, you can also use shortcut. Now, raw material consumed during the year, wage cost, overhead cost is known as cost of production into finished good holding period divided by 12 months directly. Sir, why you are not using same logic for work in progress? Because of that 50%, 50%, 100% difference values is there. But here all are 100% values only, na? Are you clear, ma? This is about value of stock of raw material, value of stock of work in progress, value of stock of finished good. In that workbook problem, they touched these three concepts only. But for safety side, learn remaining also. Next, ma. Value of debtor. When it comes to the value of data, credit sales into debtor's point of view, there is a no holding period, ma. Debtor's point of view, there is a collection period. Debtor's collection period divided by 12 months. This is a general rule. Sometimes they will specify, please calculate debtors on cost basis. Please calculate debtors on cost basis. At that time, cost of sales into debtors collection period divided by 12 months. This is only when they specifies. Okay. Next. Prepaid expenses. When it comes to the prepaid expenses, amount of expense into, here we need not to use holding period and collection period. Advance payment period. Advance payment period divided by 12 months. Next. Creditors. Raw material consumption during the year or credit purchase. Raw material consumed during the year or credit purchase into, here also not involved holding period. Here is a payment name called creditor payment period. Creditor payment period divided by 12 months. The next one, outstanding expenses. Amount of expenses into, the time period name is called time lag. The time period is name called is what, ma? Time lag divided by 12 months. This is the discussion. This is a discussion. Clear? This is a problem. It available in your workbook. Illustration number 35. Illustration number 35. Put a 20 stars for this. Okay. Working capital expression is not my intention to explain. But without knowing that working capital, you can't solve this way because you learned ఇంటర్ నా గుర్తురావు మనకి. అందుకే ఆ వర్కింగ్ క్యాపిటల్ మొత్తం చెప్పి ఇప్పుడు ఆ ప్రాబ్లం చేస్తున్నా. టేక్ ఏ బ్రేక్. ఆఫ్టర్ బ్రేక్ వీ విల్ కంటిన్యూ. Okay, so illustration number 35. L Limited want to implement just-in-time program with the impact on three types of stocks as given below. Sale value is given 1200 lakhs. Proposed also same sales. Cost to sales value percentage. Write properly. Raw material 40%, conversion cost 30%, for proposed 44% and 32%. Now stock holding periods is given. Raw material, work in progress, finished good. When it comes to here condition, proposed for raw material less than 25% of existing, for work in progress less than 50% of existing, next finished good less than 40% of existing. Next, completion of work in progress percentage. Raw material conversion cost. I said already industry norms now. What's the industry norm? Raw material you have to consider 100%, wages and overhead you have to consider 50%, but here they mentioned. So raw material, how much percentage you have to consider? 90% only. When it comes to the conversion cost, nothing but raw material overhead combinedly known as conversion cost. You have to consider 75% for existing. What about the proposed? 90 and 75% at that case also. Next, fixed cost. Fixed cost of raw material, variable cost of raw material. Fixed cost of raw material, variable cost of raw material. Now the fixed cost is 2 lakhs for a proposed 15% less than the existing value. When it comes to the variable portion, 0.09 per rate of stock held. Okay. Next, when come to the work in progress, work in progress fixed cost, work in progress variable cost. Alignment is not good, just change that alignment. Next, fixed cost for finished goods is given. Fixed cost of finished good, variable cost of finished good. Okay, now see, financial charges 18% on what capital ma? Now that is a topic I explained. With the help of this concept, you can calculate working capital. That working capital amount into 18% is a financial charges. Do you understand the purpose of explanation of working capital? Okay. Next, find out the cost impact of implementation of just in time. Okay, then fine. First, please calculate working capital. Now how to calculate working capital ma? Here stock of raw material is there, stock of work in progress is there, stock of finished goods is there. Now when it comes to the stock of raw material consumed during the year, what you can observe, cost to sales value percentage, raw material cost is 40%. On which value? Sale value. 1200 lakhs into 40% into holding period, raw material holding period 1 month. Now the answer, 40. Wait a minute. Yeah. How much ma? 40 lakhs. Next, when it comes to the working progress ma. How to calculate working progress? Now working progress calculation is somewhat different. Here stock of raw material is there, conversion cost is there. When it comes to the stock of raw material, 1200 lakhs into 40% you will get raw material consumed during the year into working progress holding period. What is the working progress holding period? 0.5 months. Now 0.5 months divided by 12 months. What ma? 20 lakhs. This is about only stock of raw material. Out of that they said you have to consider only 90%. What is the answer? 18 lakhs. When it comes to the conversion cost, they mentioned 30%, 1200 lakhs into 30%, you will get a cost. Working progress holding period 0.5 months divided by 12 months. Answer 15 lakhs. Don't consider entire 15 lakhs, consider only 75%. 11.25 lakhs. Now the total please. What ma? 69.25 lakhs. Next, when it come to stock of finished goods, how to calculate stock of finished goods? Cost of production. Now cost of production is nothing but 1200 lakhs into 70%. 40% raw material, 30% conversion cost. Total is known as cost of production. Now you can observe cost to sales value is given. Now if there is a no between figures, cost of production is nothing but cost of goods sold. Cost of goods sold is nothing but cost of sale. Cost of production is nothing but cost of sale. That is the logic we have to use. Now answer, holding period, finished good holding period. Answer 35 lakhs. There is a no discussion of percentage of completion. Are you okay now? Now debtors is there. Debtors is there. Okay. Creditors is there. Prepaid expenses, outstanding expenses. Now sum of these three stocks is known as working capital. Working capital please. 40 plus 18 plus 11 69 sorry wait 40 plus 69.25 plus 35. These two summation, na? 69.25. 40 plus 18 plus 11.25 plus 13, not this one. What ma? 104.25. Same calculation you have to do for proposed plan. Okay? Any doubt regarding this? Okay, then fine. What is the purpose of calculation of this? 104.25 lakhs? Finance cost purpose. You already have material, stock, variable cost and fixed cost, work in progress cost, variable and fixed, and finished good, variable and fixed. But the missing thing is finance cost. The finance cost purpose only you have to do this working capital calculation. Are you clear now? Then fine. When it comes to the proposed plan, stock of raw material, 1200 lakh sales only, na? Now percentage, how much they given? 44%. Holding period, 25% less than existing, means what? 0.75 months, 0.75 months out of 12 months. 33 lakhs. When it comes to stock of work in progress, two calculations is there. Raw material calculation, 1200 lakhs into 44%. First I want value, no? Raw material value into work in progress holding period, less than 50%. Now what is the less than 50%? 0.5 months. Out of 12 months, how much? 20. Don't consider 22 lakhs. Please consider percentage of completion. 90%. What ma? 19.8 lakhs. Conversion cost also there. 1200 lakhs into how much is a conversion cost percentage? 32%. Now you will get a value. That is nothing but conversion cost rupees. Now conversion cost rupees into holding period. Wait. 50% less on 0.25. It means 0.25 only we have to consider. Raw material in where? Work in progress. Which holding period we have to take? Work in progress holding period only you have to take. Stock of raw material not related to stores room, it's related to work in progress room. The work in progress holding period you have to consider. Now, work in progress holding period less than 50%. What is the actual? 0.5. Less than 50% means 0.25. 0.25. Now value will change. How much more? 16 lakhs. Out of that you have to consider only completion. After completion 16 lakhs. 1200 lakhs into 44% you will get a raw material cost into raw material work in progress holding period 0.25 months. 11 lakhs. 11 lakhs. Out of 11 lakhs consider only 90%. 9.9 lakhs. Now when it comes to conversion cost, 1200 lakhs into 32% you will get a cost into holding period existing 0.5 months, proposed less than 50%, that is nothing but 0.25 months, divided by 12 you will get amount. Please, this 32% correct only now. Okay, 16 lakhs. Out of that, you have to consider only 75%. Answer 12 lakhs. Next, when it come to stock of finished good. ఎందుకురా మిస్టేక్స్ చెప్తున్నారు ఇక్కడ? ఎక్కడ? Here 8 lakhs into 75%. Amount please? 6 lakhs. Any doubt here? No. When it comes to the finished good calculation, cost of production only, na? What is the cost of production? 1200 lakhs sales. Out of that, 44% plus 32% is the cost of production. Total cost of production 76%. If you multiply with 76% on sales, you will get what value? Cost of production value. Now cost of production into finished good holding period. Now what is the finished good holding period, ma? 0.5 into 40%. 0.31 months divided by 12 months. Any completion calculation? No. Directly you can take 22.8 lakhs. Now the answer 71.7 lakhs. Now this is a working capital calculation. Now come to here. Estimation of working capital, cost of raw material, cost of conversion amounts I calculated for direct calculation. 480 lakhs, 528 lakhs, 360 lakhs, 384 lakhs. Now value of stock of raw material. Cost of raw material into raw material holding period divided by 12 months. Now what is the cost of material? 480 lakhs. That is the calculation we did 1200 into 40%. Into holding period 1 month divided by 12 months. 40 lakhs, right? Next, when it comes to value of work in progress. Raw material is there, conversion cost is there. Now cost of material into work in progress holding period divided by 12 months into percentage of completion. Conversion cost into work in progress holding period divided by 12 months into percentage of completion. 29.25 lakhs is total, 15.9 lakh is the total. Next, so you can observe 528 into 0.5 months. Out of that 0.5 months, you have to consider 50%, less than 50%, na? Now divided with the 12 months, percentage of completion 0.9. I recorded as like a formula. Next, conversion cost also be same logic. When it comes to the value of finished good, how to calculate value of the finished good, ma? Cost of production. How you get a cost of production? Raw material cost, labor cost, direct expenses, you will get a factory prime cost plus factory overhead, you will get a production cost. But labor is not there, direct expenses is not there, factory overhead is not there. That's why I consider raw material plus conversion cost is nothing but what cost? Production cost. For that production cost, you have to adjust a stock, working progress stocks, then you have to add admin overhead. Now if you add admin overhead, you will get cost of goods sold. For that cost of goods sold, you have to adjust selling and distribution. You will get cost of sale. Now there is no information of admin overhead, there is no information of selling and distribution, there is no adjustment of stock, opening or closing stocks. That's why cost of production, cost of goods sold, cost of sale all are same. That's why I consider cost of sale is nothing but a cost of production. Now when it comes to the cost of production, in our calculation, I calculated 1200 lakh of sales into 70%. That is nothing but these two values only, na? 40 plus 30, 840 lakhs. What about the finished good holding period? 0.5 months divided by 12, you will get 35 lakhs. Next, when it come to this one, 912 into 0.4 months into 40% less than existing. But here I wrongly taken as a 60%, sorry. 40 is the right answer. 0.4. 22.8 only, no? Rectify that, ma. Here wrongly placed 0.6 in your notes. It is not 0.6, it is 0.4. Just a clerical error. Answer right only. Okay, then fine. Sum of all values is known as what, ma? Working capital. Ma, don't add these two. The two are clues for that cost of material, conversion cost. Now the sum of stock of material, stock of work in progress, stock of finished good is known as working capital. Now what is the working capital? 104.25 lakhs, 71.7 lakhs. Same answers only, Nama. You can observe the presentation, two different presentations. But the concept is only one. Okay, then fine. They're not asking about the working capital, they're asking about what? Cost analysis. Let us go with the cost analysis. That is nothing but step 2. Estimation of total cost per existing and proposed policy. First, I will consider fixed cost. Now, please tell me the fixed cost. They provide fixed cost for 3 elements. For raw material they given, for work in progress they given, for finished good also they given. Amounts, please. Existing 2 lakhs for raw material, 3 lakh for work in progress, 2,50,000 for finished good. Proposed ma 1,70,000, 2,40,000, 1,50,000. Now fixed cost dumping is easy. Why? Because given information only. But when come to the variable cost, dumping is very, very important. Why? Because calculation is involved. Now what is the calculation is involved, ma? 0.09 per raw material stock held. Raw material stock held. What is meant by raw material stock held? The raw material stock held is nothing but value of stock of raw material. Now what is the value of stock of raw material? 40 lakhs. 40 lakhs into 0.09. Have you got it? Next, work in progress variable cost. 0.04 per stock of held. What stock held? Work in progress. Why? Because this information related to work in progress. Now what is the work in progress stock value? What, ma? 29.25 lakhs. Next, when it comes to finished goods, 0.02 per rate of stock held of finished good. Stock held of finished good, how much, ma? 35 lakhs into 0.04, 0.02. Now the answer is clear. The same logics for proposed also. Now rates are changes are 0.05, 0.05, 0.02, 0.01 into value of stock of raw material into value of stock of work in progress into value of stock of finished good. Are you clear? Now, if you add all, you will get total cost. That is nothing but fixed cost plus variable cost. Apart from that fixed cost plus variable cost, there is another discussion called what cost, ma? Finance cost. Now we can use a name called opportunity cost loss. Now what is the opportunity cost loss? 15% on working capital. Where is the working capital? Step 1. Now what is the working capital? 104.25 lakhs into 15%, 71.7 lakh into 15%. 18%, huh? Okay, sorry. 18%, 18%. Value of finished goods. Here, 15.2. 912 lakhs into 0.5 months into 0.4 divided by 12 months. Okay, here you said you already this man 22.8 lakhs. Same only 40% I considered. 40% is nothing but 0.31 months. Solve this one. Now I think you said based on book. What is the answer? 22.8 only now. Then why here that wrong calculation is coming? Here 22.8 lakhs is correct. Is correct. What is the logic we used? Finished good equals to 1200 lakhs into 76%. That you will get what? Cost of production into finished good holding period. So previously it is 0.5 months. And that I will consider only 40% in divided with 12 months. Now the answer is 22.8 lakhs. Which one is 0.2? What 0. Where you are confusing, ma? Okay. 3.31 months. At the calculation 0.6 is wrongly taken. Wrongly. .5 minus less 40%. Okay. 0.31. Yeah, that's 0.6 right only now. Here 0.6 only. Now they calculated with help of 0.4. That's why the conflict is arises. 40% less. 40% less means 0.5 months. 40% less means the pending 60% only now. No, don't rectify. It is a 0.6 only. Don't rectify. Sir, with the numerical calculation, we understand 1200 lakhs into cost of production 72%. Now amount of, please, amount. What ma? 864 lakh is known as what? Cost of production into finished good holding period. What they said previously 0.5 months, now 40% less means the pending is 0.6. Now that is nothing but 0.5 months. Out of that I need to consider only 0.6% or 60% into divided with 12 months. Now are you got it, the 22.8 lakhs? Okay, then fine. Come to opportunity cost. Check with the opportunity cost ma. 104.25 lakhs into 18%. 18.76500. Next 71.7 lakhs into 18%. 12.90600. Now the total is known as total cost. Now please tell me, total cost include opportunity cost. That is nothing but finance cost. Now what's your decision? Existing policy total cost is 31,73,500. Proposed policy is 20,70,200. Now which one is the best one? Proposed is the best one. Any doubt in this problem? So here is the purpose of working capital is two things. For the purpose of variable cost calculation as well as opportunity cost calculation. This is about just in time. There is no further discussion related to the just in time. Remaining few problems is there. They all are related to cost benefit analysis. Or 2-3 problems is there in workbook questions and past question papers and MQPs. They all are related to first problem we discussed now, cost benefit analysis. Is one of the problems, values also not changed. Okay, then fine. When it come to the next chapter, throughput costing. Throughput costing. Throughput costing and theory of constraint. The concept of theory of constraint is nothing but the concept you learned in SM. Bottleneck. Okay. Now, when it comes to the throughput costing, sometimes they will using a name called throughput accounting. This concept saying that system of costing. When it comes to the system of costing, as of now, we listen to two words: absorption costing system, marginal costing system. There is a third concept name called throughput costing system. Very clear? So how many of you know the concept of marginal costing system and absorption costing system? What is the difference between the marginal costing system and absorption costing system? Marginal cost, it only takes variable portion of production overhead. Absorption costing takes total production overhead. Okay, that's only student knows. But why they consider like that, they don't know. Are you clear? Now, this topic is not that much of important for exam. That's why I will explain in notes itself. Okay. Now, when it come to throughput costing, first the cost elements are classified into different situations. We are classifying in different names. Here is the purpose. I classified as a manufacturing cost and non-manufacturing cost. Sometime we will classify cost into direct cost and indirect cost. Sometime we will classify cost into variable and fixed cost. Depends upon the context we will classify. Here is a classification name called manufacturing cost, non-manufacturing cost. In manufacturing department, what are the cost we will incur means material cost we will incur, labor cost we will incur, direct expenses we will incur, production overhead we will incur. Are you clear, sir? So generally in entire costing depends upon the three buildings. One is admin, production building, admin building, sales department building. Clear, sir? Here is a discussion relating to production building. In production building, what are the costs we are incurred? That cost is known as manufacturing cost. What are the costs we are incurred in admin building and selling department building? That is called a non-manufacturing cost outside the production. Now the outside the production is nothing but admin overhead and selling and distribution overhead. Are you okay? Now, when it comes to the manufacturing cost, direct material cost, direct labor cost, direct expenses, factory overhead. Here the factory overheads are subclassified into variable factory overhead, fixed factory overhead. Here also variable is there, fixed is there. Here also variable is there, fixed is there. But we will treat this as an outside cost. That's why we will discuss on total point of view only. Now, the purpose is here these two words: product cost, period cost. Product cost and period cost. Now, what is the meaning of product cost? What are the cost I need to charge you to product? What are the cost I need to charge you to product? This will help you value of the stock. This will help you what ma? Value of stock. Why? Because for this year, your production units are 1 lakh units, but you sold only 80,000. What about the 20,000? Stock na, you have to transfer to next year. Are you transferring it with units or rupees? Rupees only na. How you get rupees? Units into cost per unit. The cost per unit is nothing but product cost per unit. Product cost per unit. Now when it comes to the period cost means cost are not used for valuation of stock. You need not to multiply with the 20,000 units. Do you understand the difference between period cost and product cost, ma? Okay, then fine. Now the concept is came into the picture, absorption costing. This is also been known as traditional costing system, outdated costing system. Now, they're saying that product cost means what are the costs you are incurred in entire production building, consider as a product cost. Consider as a product cost. What are the cost you are incurring in the production building? Raw material, labor, direct expenses, and production overhead. That production overhead also what and what? Variable portion consider plus a fixed portion also consider. For the purpose of what, ma? For the purpose of stock valuation of 20,000 units. Now what about the pending cost? Admin overhead, selling and distribution. Treat them as a period cost. That is a concept set by absorption costing system. Now the point, it is a mistake. Why it is a mistake means, this amount of fixed cost is there now. We are transferring to next accounting period. Fixed cost will not transfer to next accounting period. Only what cost we can transfer to next accounting period? Variable cost. But absorption cost says that transfer both variable as well as fixed. That's why the new concept came into the picture, marginal costing system. What is the solution they're taken? We can't transfer closing stock with a fixed cost. We transfer only with help of variable cost. That means in marginal costing, period cost means direct material, direct labor, direct expenses, variable portion of production overhead. Variable portion of what overhead? Production overhead. Now what are the pending cost? What are the pending cost? What is the pending cost we have remaining? Admin is there, selling is there, plus factory overhead, one missing one, fixed. That will be treated as a what cost? Period cost. Do you understand the difference between absorption costing and marginal costing? Very clear? It is a concept of stock valuation. It is a concept of what valuation, ma? Stock valuation. Next, few people కామ్గా ఉండరుగా, ఇంకొకటి లేసి దాంట్లో కూడా తప్పు ఉందన్నమాట. ఆడే తప్పు ఉంది, దానికి సొల్యూషన్ చెప్పాను అన్నాడు. నువ్వు చెప్పింది కూడా తప్పని ఇంకోటి వచ్చింది. దట్స్ అ కాన్సెప్ట్ నేమ్ కాల్డ్ throughput costing system. Now their argument is when you transferring to next accounting period of stock, at that stock the only tangible thing is raw material. The only tangible thing is raw material. Labor is a intangible thing we can't identify. Direct expenses, like take an example, electricity. Can you identify? Can you store? Electricity can store, electricity can store చేయొచ్చు ఎలక్ట్రిసిటీని. నేను ఎక్కడేం లేదబ్బా. ఎలక్ట్రిసిటీ కాంట్ స్టోర్, ఇట్స్ ఎ పెరిజిబుల్ గుడ్. యూ కెన్ యూజ్ యాజ్ ఆఫ్ నౌ, యూ కాంట్ స్టోర్. క్లియరా? నేను స్టోర్ అంటే సేవ్ చేసుకోవచ్చు అని అడుగుతున్నా. ఈరోజు ఎలక్ట్రిసిటీ ఒక 10 యూనిట్స్ని సేవ్ చేసుకొని రేపు యూజ్ చేసుకోవచ్చా? ఇట్ కాంట్. దెన్ వై యూ ఆర్ ట్రాన్స్ఫర్ టు నెక్స్ట్ అకౌంటింగ్ పీరియడ్. Are you clear? Labor can store, labor work can't store. Today work we can do today only. Yes or no? Then why you are transferring? That is a question asked by one person. Now they saying that when it come to transfer into the next accounting period, tangible things only need to transfer. Now as per marginal costing, what are the elements I consider? Direct material, direct labor, direct expenses, variable production overhead. Out of that, only direct material is a tangible thing, remaining all are intangible. Now as per throughput costing system, product cost means what? Only direct material cost. What are the pending cost? Remaining cost: labor, direct expenses, variable overhead, fixed and variable, admin overhead, selling and distribution, all are period cost. If you understand this, this is the concept of absorption costing versus marginal costing versus throughput accounting. Are you okay? Now, the important thing is income statements. The important thing is income statement. Now, as per marginal costing income statement, all of you know, sales minus variable cost, you will get contribution. Contribution. Now, if you remember, at the time of intermediate, your faculty will say, in marginal costing, fixed cost is irrelevant for decision making. Fixed cost is irrelevant for decision making, but it is relevant for profit calculation. Understand the logic, ma? For decision making, fixed cost is irrelevant. For profit calculation, it is relevant. That's why contribution minus fixed cost. You will get what, ma? Profit. Now, check out the elements. Variable cost list: direct material, direct labor, direct expenses, variable production overhead, variable admin overhead, variable selling and distribution overhead. This is the income statement we are used for profit calculation, not for product cost. As per product cost definition is what? Direct material, direct labor, direct expenses, variable production overhead. Combine of this is known as what cost? Product cost. This is the elements you need to use for the purpose of stock valuation. But when it comes to the profit calculation, you have to consider all variable cost now. That's why even though they are outside variable cost, I will consider for the purpose of profit calculation. Don't confuse. Are you clear, ma? Next, contribution. On that contribution, you have to reduce fixed cost. Production factory overhead fixed cost, admin, selling and distribution. You will get amount name called what, ma? Profit. This is the detailed structure of marginal costing income statement. Next, when it comes to absorption costing income statement. Absorption costing income statement. Can I name it as sales minus variable cost? You will get contribution. In absorption costing point of view. Sales minus variable cost, you will get contribution. As per absorption costing. No, it's a different mode of steps is there. Sales minus cost of goods sold. Cost of goods sold. What is the meaning for cost of goods sold? Direct material cost plus direct labor cost plus factory overhead. That is known as what, ma? Cost of goods sold. Absorption costing says that consider entire production overhead, na? Don't split it. Split happen in where? Marginal costing. Consider total factory overhead. Now you will get what, ma? Cost of goods sold. Now when it comes to the outcome name is called gross margin. Out of that gross margin you have to reduce admin overhead, selling and distribution. There is no split of variable nature. There is no split of fixed nature. Consider total. Now you will get a profit as per absorption costing income statement. Next, when it comes to the important learning, throughput costing income statement. Can anyone tell me the throughput costing income statement? Sales minus raw material cost of goods sold. Not cost of goods sold. Raw material cost of goods sold. What is the difference? Cost of goods sold means material, labor, factory overhead. Raw material cost of goods sold means only raw material is the meaning. Are you clear now? Now, sales minus raw material cost of goods sold, you will get what, ma? Gross margin. After that, you have to remove remaining pending cost. What are the pending cost? Direct labor, direct expenses, factory overhead, admin overhead, fixed overhead. You will get amount of profit. Amount of profit. You understand? Now the learning thing is product cost and period cost. The definition of product cost is valuation of stock. Period cost means cost not used for valuation of stock. Absorption costing says one logic, marginal costing says another logic, and throughput accounting says some more logic. Now what is absorption costing says that? When it comes to the valuation of stock, consider material cost plus labor cost plus factory overhead total. Remaining pending cost is treated as a period cost. What marginal costing says? No. In factory overhead, fixed don't consider for stock valuation. Consider only direct material, direct labor, direct variable, fixed overhead. That is nothing but direct expenses. Are you clear, ma? Next, Throughput accounting says that don't consider labor direct factory overhead. Consider only raw material. Why? Because they both are intangible things. We can't transfer to next accounting period. So that is the one coin side discussion. The second coin discussion is profit calculation. Above discussion is decision making and stock valuation. The next discussion is a profit calculation. Are you okay? But ultimately, what you follow, you will reduce all. What are the statement you follow? You are reducing all cost, all variable cost and all fixed cost. But the concept of stock valuation is there, na? That is impacts. That is impacts. Clear? Next. Open illustration number 16. Not 16. Wait. 17. And change the name also in notes. Wrongly written problem number 16. It is not 16, 17. Illustration number 17. Given below is the basic data relating to New India company for 3 years. Production and inventory data. Planned production 2500. John, there is no opening stock. Huh? So Jan first means opening stock only now. There is no opening stock. Actual production also 2500. Sales 2500. There is a no opening, there is a no closing. Can I name this called planned actual production equal to sales as per year 1. When it come to year 2, the actual production is 2500, but you sold only 1750. What about the pending? 750 closing stock. Stock is there means you have to consider period cost for the valuation of that 750 units. If you not use that calculation part, matching concept will not happen. Why? Because you will consider sales 1750 units, cost for production units. Are you clear? You have to adjust with the 750, then matching concept will be clear. Next year 3 actual production 2500, but they sold 3250. Is it possible? There is no production, na? They produced only 2500, but they sell 3250. Yes, it is possible if there is a opening stocks. There is a opening stocks. Are you guys clear? Now, revenue and cost data are 3 years. Selling price, manufacturing cost, classification, direct material, direct labor, variable manufacturing overhead. Total variable cost per unit. Next, used only under absorption costing, fixed manufacturing overhead. Now the total fixed manufacturing overhead is how much ma? 12 rupees. Huh? Okay. The total absorption cost per unit 36 rupees. Can I name it is called cost of goods sold? Are you clear? When it come to marginal costing, you have to consider 24 for stock valuation. If it is absorption costing, you have to consider 36. Yes or no ma? That's the concept I explained. Marginal costing, direct material plus direct labor plus only variable portion of factory overhead, not overhead, factory overhead or production overhead. When it comes to the absorption costing, direct material, direct labor, variable manufacturing overhead and fixed manufacturing overhead also. That is nothing but 36 rupees per unit. Are you okay now? Then when it comes to the throughput accounting, Only 12 rupees. For what? Profit calculation, huh? Stock valuation. Stock valuation. Throughput costing period cost. Marginal costing period cost. Sorry. Period cost or product cost? Product cost. Period cost means fixed here. Next here, absorption costing, product cost. Next, variable selling and admin cost per unit 4 rupees. Fixed selling and admin cost per year 5000. Admin related. Now you are required to prepare absorption costing income statement, marginal costing income statement, reconciliation of income statement under absorption costing and marginal costing, throughput costing income statement. Draw your observations. I will explain notes itself, ma. Income statement as per absorption costing. Sale units please, production please. Production units. What production? Planned production, actual production. Actual. Planned means estimated. If there is a no actual, you can take an assumption planned is nothing but actual. Now the actual production 2500, 2500, 2500. Now sales. Sometime we did less than production, sometime we did more than production, sometime we did equal to production. Now year 1 sales units please 2500, year 2 1750 closing stock is there, year 3 3250 opening stock added. Now sales rupees I want, selling price given in the question paper 40 rupees 48 sorry 48 into what? Production or sales? Production or sales? Sales units. Are you clear, ma? Next, cost of goods sold 36 rupees into how much? 90,000. What about year 2? What, ma? 1750, 21,000, 63,000. Next, 1,17,000. Next, you will get what, ma? Gross margin. After gross margin, you have to less what? You have to reduce what? Selling admin rendu తీసి పక్కన పడేయడమే. Now what about the variable portion of selling and admin overhead? 4 rupees per unit. Okay, then consider. Next, fixed portion remains constant for all level of activities. Yes or no? Now you will get a profit as per absorption costing. You will get a profit as per absorption costing. Next, case B, income statement as per marginal costing. Sales less variable cost. Sales less variable cost. What variable cost I have to consider? All. Why? Because here I am not calculating stock valuation, I am calculating profit. Raw material 12 rupees. Next, labor, variable portion of factory overhead, and selling also variable portion is there, na? 4 rupees, 28 rupees. Are you okay? Next, you will get an outcome name called contribution. On that you have to reduce fixed cost. 2 types of fixed cost is there. Administrative fixed cost and factory. Now please tell me the factory overhead fixed cost. 4 rupees, 12 rupees per unit. 4 rupees into 2500. How much? I asked that only, ma. Per unit, how much? 12 rupees into 2500. Now there is a concept. What are the fixed cost you have at initial clue calculation that will be reflected in all outputs? Are you okay? Next, selling 5,000, 5,000. Now you will get a profit 15,000, 0, 30,000. Now what is the case C? Comparison. Now year 1 profit of absorption 15,000, 15,000. Difference is there or not there? Why? Because there is a no opening stock, there is a no closing stock. There is a no opening stock and there is no closing stock. Now when it come to year 2 absorption, 9,000 profit. Here 0 is the profit. Why the differences came? Why the differences came? Because of closing stock of 750 units. On that 750 units, fixed production overhead cost extra considered in absorption costing, not considered in marginal costing. Are you got the logic, ma? Next, year 3, 21,000, 30,000. Why the differences came? Because of opening stock. And that opening stock 750 units into factory fixed cost per unit of amount included in absorption costing, not included in marginal costing. That's where the differences came. See here, absorption costing, year 1 I written logic also. Production equals to sales. No stock, no difference in profit. Production is greater than sales. Why? Because closing stock is there, na? The difference, a profit 750 into 12 rupees. What is the 12 rupees? What is the 12 rupees? Factory production overhead. Year 3, production is greater than sales, less than sales. Why? Because of opening stock. The difference in a profit 750 into 12. The only difference came because of marginal costing not consider factory production overhead, absorption costing consider factory production overhead. Then okay, what next question? Income statement as per throughput costing. Throughput costing. Now sales common only. Less raw material consume cost of goods sold. Only raw material. What is the only raw material cost? 12. If you reduce, you will get gross margin, but in a technical term, the gross margin is known as throughput contribution. Throughput contribution. Now, on the throughput contribution, you have to reduce direct labor, variable factory overhead, fixed factory overhead, variable selling and admin overhead, fixed selling and admin overhead. You will get what, ma? Profit. Highlight that variable selling admin overhead. Put a star for that point. %90 student will do mistake for this calculation. What is your identification? What's your identification? All them they calculated per unit into production units. That's where the constant values are came. But when it come to here, so selling is purely depends upon what units? Sales expenses depends on what units? Sales units. Out of flow we will do mistake. Just identify, do right calculation. Are you got it, ma? Now zero. Profit 15,000, 9,000 loss, 39,000. Now what is the logic behind this? Year 1. Production equals to sales. There is a no changes in the profit. That's why if it is in a marginal costing, absorption costing, throughput costing, there is a no issue if there is a no stock. When it is a issue, if there is a opening or closing stock. Are you clear? That is a proof. Year 1 profit of absorption costing 15,000, year 1 of marginal costing 15,000, year 1 of throughput also 15,000. Why profits are not affected means because there is a no opening stock and closing stock. But you can observe with the absorption costing year 2, year 3, there is a stocks. That's why the profits will be vary. Any doubt regarding this absorption costing? Throughput accounting. Okay. There is one model of questions they will ask. Next, when it come to theory of constraint. Theory of constraints. I said already theory of constraints means limited resources. If you have unlimited resources, no issue. Yes or no? If company have unlimited resources, there is a no issue. But if company have a limited resources, we can't produce and we can't meet customer demand. Now my point is, in my company, I have a 3 process units. Process unit 1 is 10,000 units capacity. Process 2 unit 2 is a 12,000 capacity. Process 3 is only 8,000 units capacity. The customer demand is 10,000. Don't confuse the value. 3 missions. Go with the operation or mission, no issue. Mission 1 capacity 10,000. Mission 2 capacity 12,000. Mission 3 capacity 8,000. Customer requirement 10,000. Now, can I meet the customer demand? Why? The output I manufacture, it depends upon slowest mission or operation in my organization. What is the slowest mission I have? Slowest capacity or low capacity? 8,000. That's why I can produce only 8,000 units. Do you understand the bottleneck concept, ma? The output determination is purely depends upon the slowest mission or operation in our organization. So I can't produce 10,000, I can produce 8,000. Now, sir, already mission 1, mission 2, 10,000, 12,000 is there, na? Then why you can't miss? Because 8,000 here, last mission, that can't produce 10,000 units. Okay. Now, theory of cost is a scientific technique of managing bottleneck issue. Now, here is that example. The capacity is 10,000 units. I need to transfer to second mission. That capacity is only 8,000. But in the market, the customer requirement is 10,000. I can't produce entire 10,000. I can produce only 8,000 because of a bottleneck issue. Now, what is the demand in the market? 10,000. How many I produced? What about the 2,000? I can't produce. Because of this, there is a 2 disadvantages. One is profit loss. Profit loss. Profit loss is not a right word. Contribution loss. I said already, in decision making, we are not using profit, we are using contribution. Are you got it, sir? Contribution loss. Second disadvantage is losing of market share. Losing of market share. What does it mean for losing of market share? 2,000 people will shift to our competitor or some other seller. Automatically your market share, what happened? Decreases. This kind of issues is there in the market. Next, when it comes to the definition point of view. Do you understand the concept of bottleneck? Now let us check with the definition part of bottleneck issue. The output of a factory determined by speed of what ma? Slowest mission or operation. That mission operation is called bottleneck mission or bottleneck operation. Now when it come to in mission 1, mission 2 is a full capacity is there na, but we can't produce, but they will produce. Here they will do 10,000 units work, they will send it to here, but after here it will not come out, it will come out only 8,000. The 20,000 is known as working progress, sorry, 2,000 is known as working progress. Due to this working progress, one cost will be increased, that is nothing but carrying cost. That is nothing but carrying cost. That is the disadvantage we have because of bottleneck. Next, when it come to, yes, bottleneck is a problem or a solution? Bottleneck issue is a problem or solution? Now please tell me the solutions. First, identify the issues with the help of that bottleneck. What is the first issue we identified? We can't fulfill the customer need. Second, due to of that slow production, carrying cost will be increased. Market share we are losing, profit we are losing, contribution we are losing. That is the problems I identified because of bottleneck issue. For that, what is the remedies you have? Increase the capacity of bottleneck. It means upgrade the machinery. Yes, outsource is nothing but subcontract. Are you clear, sir? For the 2,000, go with the outside manufacturer. They will manufacture and give. That is called subcontracting. Now upgrade the machinery. Can I slow down the remaining machineries? Can I slow down the remaining machineries? It's illogic. You said upgrade the bottleneck machinery. I'm saying that why upgrading the bottleneck machinery? Slow down the remaining two machineries. If you slow down, cost will be increased. But the only thing is we are doing here cost reduction or cost control. Are you okay? Now, let us check. What are the remedies we have? Go with the subcontracting or enhancing mission and operation and upgrade the technology and reduce the wastage and scrap. Generally, that mission 3 is there none in our example. It is a capability of 10,000 units, but wastage is 2,000. It is a capability of how much ma? 10,000, but out of the 10,000, waste and scrap units are 2,000. The actual outcome is coming 8,000. That's why the bottleneck issue. If you reduce that wastage, what happen? We can meet the customer demand. Na? Next, very, very important point, this one. Don't spend capital expenditure on other than bottleneck units. Other than bottleneck units. That's the point I said. But I am not said on basis of investment. I said just slow down. They're saying that the 10,000 units and 12,000 units is there na. Don't put any investment on that mission 1, mission 2. You have to put investment only on bottleneck mission or bottleneck units. Next, ratio based problems is there. First, problem number 15. Open problem number 15. Problem number 15. This is one of the model we have. Read the question. Example number 15. Catco makes a product using three machines X, Y, and Z. The product has to pass through all three machines. The capacity of each machine is as follows. X capacity 800, Y 600, Z 500. The demand for the product is 1000 units. Demand 1000. Can I meet the demand of a customer? Yes, sir. Yes or no? What is the demand of a customer? 1000. Can I meet 1000? Why? Because there is an issue of bottleneck. What is the maximum possible production? Bottleneck. 500 units. Now the bottleneck equals to 500. How many units I can produce? Just 500. Are you clear? I can satisfy 500 units of demand only, not 1000 units. This is for existing. Now they specified some extra related information. For every additional unit sold per week, the profit increases by, if you sold extra, you will get a profit rupees 50,000 rupees per unit. Or as per existing, how many units I am selling? 500. If I sell more than 500 per unit, I will receive 50,000. Now Catco is considering the following possible purchases. They are not mutually exclusive, hence combination of multiple proposals are to be evaluated. Now proposal 1. Replace machine X with a newer model. This will necessary capacity to 1100 units per week and cost 60 lakhs. The cost is 60 lakhs. Now what ma? Replace machine X with a newer model. This will be increases capacity 1100 units. It means X 1100, Y there is no discussion, 600, Z there is no discussion, 500, demand 1000. Now what is the bottleneck? Any incremental units? There is no incremental units, no incremental revenue. Guys, clear? In this problem, as per suggested answer, as per this board solution, they are not focused on rupees point of view, they are focused only on units point of view. Are you okay? If you want to express decision based on rupees means extra unit into 50,000 revenue, 60 lakh as a cost. You have to compare with the benefit and cost, you will get a decision. Are you okay? Proposal 1, there is a no revenue, but there is a cost. How much? 60 lakhs. Proposal 2, invest in second mission Y, increasing capacity by 550 units per week. The cost this mission would be 68 lakhs. X same as existing 800. Y existing 600, now it is a 550 units. Proposal nana, capacity increase, sorry, wait, increases by previously 600, now it increased by 550. 600 plus 550, 1150. Z same as existing 500. Demand 1000. Can you meet the demand? No. Bottleneck how much? 500. Any incremental sale units? No. If there is no incremental sale units, no incremental revenue. But you have to spend cost how much? 68 lakhs. When it comes to the proposal 3, upgrade mission Z of cost rupees 75 lakhs, thereby increases capacity to 1050. Now there is no changes in XY, There is only change in Z as per proposal. What about the X? 800, Y 600, Z 1050. Demand, meetable demand. Meetable demand how much? Bottleneck is a meetable demand. Now what is a meetable demand? How many units extra? Existing 500. Now the incremental units are 100. Per unit how much? 50,000 into 100. How much? 50 lakhs. But the upgrade cost how much? Now best, worst. Are you clear? Next ma. Required which cat cause best course of action under throughput accounting. This is individual point of view. This is individual point of view. Now you can see not mutually exclusive. Then you can go with the option 1, option 2 combo, option 2, option 3 combo, option 1, option 1 and option 3 combo, option 2 and 3, 1 and 2, 1, 2, 3. You have to check all combos. Now as of now we checked individual point of view. Now I go with the 1 and 2. Now 1 and 2 what happened? Proposal 1 and 2 combinedly. 1100x 1150y. Now there is no discussion of Z. Now the bottleneck is 500. Now proposal 2 and 3. 2 and 3. What happened? X will not impact 800. Y will impact 1150. Z will impact 1050. Now the demand. Bottleneck 800. Extra units I enjoying 300. Existing 500 ma. Because of these proposals, extra how many units I producing? 300. 300 into 50,000. 150 lakhs, but cost 68 plus 75. Two proposals combination. Benefit is more, cost is more. Benefit is more. That option you can pick. Are you okay? Next, 1 2 completed, 2 3 completed, 1 3 is there na? 1 3. 1 3 please. 1100, 600, 1050, demand 1000, bottleneck 600. 100 units are increasing but cost is more. Now if you choose option 1 2 3, 3 proposals, 1100, 1150 yeah, 1050, 1000. What is the bottleneck? Wrong answer, 1000. Demand is a bottleneck. Demand is the bottleneck. Guys, clear? Any doubt on this? Sure. Now you can observe the answer ma. As per solution, they focused only on units point of view. But there is a chance, case B, they are asking which is financially viable or feasible. If they ask financially feasible, I said already. Now take another column called benefit, cost. Benefit, cost. No benefit, no benefit, no benefit. Here is a benefit. Yes or no? 100 extra. Here is a benefit. Here also benefit. No benefit. 300 units benefit. 500 units benefit. Are you clear? Based on that only you have to write cost. Compare. Cost is more, benefit is more. If benefit is more, where is the benefit is more in a out of all, that is the best option. Okay, now? Clear. Next, when it come to put a 5-star for this illustration number 14, solve with your own. Put a 5-star for this. Do you know the concept of optimum mix? Limiting factor. When we will discuss about the limiting factor concept. If there is a limited resources, at that time we have to use the concept of best utilization. That is nothing but optimum mix. Maximum utilization will get a maximum profits. Okay, now see. 5-star. Why? Because they asked in June 25. There is a chance based on MQP. We can't say, but we can guess. In MQP, you will get 2 questions. In question paper, old question papers, you will get 1 or 2 questions. That kind of guess we can do. Why? Because model they will give, we will feel it is as per question paper. Now, Modern Co produces 3 products A, B and C, details of which are shown below. Selling prices, direct material cost per unit, variable overhead, maximum demand, time required on bottleneck resources. This is called key factor. This is called key factor. This is called key factor. Now the key factor is one of the important concept in marginal costing. Guys, clear? Now student will confuse in exam. Why? Because as of now you have a clarity. Marginal costing system is different. Absorption costing, throughput accounting costing is different. Now as per marginal costing, key factor concept is we will calculate contribution. We can't take a decision based on contribution. We are taking decision based on contribution per key factor. Now how you get means amount of contribution divided by key factor, divided by 5, divided by 4, divided by 3. You will get contribution per hour. That is called contribution per key factor as per marginal costing. Are you got it? But when it comes to the throughput accounting, we are not calculating contribution. We are calculating throughput contribution. Do you understand? As per marginal costing, how you get contribution? Sales minus variable cost. As per throughput accounting, how you get a contribution? Sales minus only raw material cost. Have you got it? Sir, how I decide? There is a no clarity, there is a no specification relating to throughput accounting, marginal costing. How I decide? Bottleneck is a part of throughput accounting. Bottleneck is a clue they provided. Which concept it is? Throughput accounting concept. Have you got it, ma? Now, Sira. Calculate optimum product mix based on. Here they asked, ma. Calculate the optimum product mix based on throughput concept. Now, first, please find out throughput contribution. How to get the throughput contribution? Selling price per unit minus only raw material cost per unit. Now, what is the raw material cost per unit? 60, yeah? 60, 70, 85. Can I take decision based on throughput contribution? No, there is a limiting factor. Now, what is the limiting factor? Time required on bottleneck resources divided with throughput contribution divided with key factor. 60 divided by 5, 70 divided by 4, 85 divided by 6. Throughput contribution per unit 60, 40, 45. Huh? Okay. 60 divided by 5, 40 divided by 4, 45 divided by 3. Okay. Now what is the contribution, throughput contribution per key factor? 12, 10, 15. Based on this you have to provide ranks. Okay. Now highest one is the first rank. Are you clear? Why we are providing rank means, first, what are the limited resources we have? We have to allocate to first rank. Now what is the bottleneck hours we have? 3,20,000. For this 3,20,000 we need to use best manner. Now first I will allocate this 3,20,000 unit hours to what ma? C. For the purpose, first we have to find out required hours. Required hours. Now the required hours calculation, 30,000 into 5, 25,000 into 4, 40,000 into 3. Required hours. For manufacturing of 30,000 units, per unit 5 hours needed. For manufacturing of 30,000, how many hours is needed? 1,50,000 hours. Here 1 lakh hours needed for manufacturing of 25,000 units. For here 1,20,000 hours is needed. Now can I allocate to A first? That is a concept set by limiting factor. Are you clear? If there is a no limiting factor calculation, we can assign based on what? Based on this. Based on throughput contribution, what is the first rank? A. But that is a not right calculation. Now we are providing rank based on throughput contribution per limiting factor, not contribution. Are you clear, ma? Now, first, 1,20,000 hours do you have? 1,20,000 hours is needed. Do you have? Yes, I have 3,20,000. I will assign full. Next, here 1 lakh hours is needed. Do you have? 3,20,000. I already used 1,20,000. Pending 2 lakhs I have. I will assign here total. Sorry. What is the second rank? This one, no? Yeah. I can allocate second here. Total 1,50,000. Now, how many hours in your hand now? Now, here is needed 1 lakh. But I can provide, I can give only 50,000. Why? Because limited resources. Are you okay? Now here I provided full hours. That's why I can manufacture full demand 40,000 units. Here also full demand 30,000 units. But here 12,500 only possible. How this 12,500? 50,000 divided by 4. I allocated 50,000 per unit 5 hours. So 4 hours. Huh? For 50,000 hours, how many units is possible? 12,500 is possible. That is about bottleneck under throughput concept. Okay. There is another exam standard model is there. Throughput contribution calculation. How to calculate throughput contribution calculation? Rupees sales minus variable raw material variable cost. Raw material variable cost. Only raw material. Now per unit selling price per unit minus raw material cost per unit. Next, throughput accounting ratio. These formulas are very important. There is a chance for MCQ also. Throughput accounting ratio. Return divided by cost. Return divided by cost. Sometimes they will give per hours point of view. Sometimes they will give minutes point of view. Return per hour divided by cost per hour. Return per hour divided by cost per hour. Now, return per hour calculation. Return per hour calculation. The amount of return we have in this throughput accounting is throughput contribution. Throughput contribution. Throughput contribution divided by product time taken for limited resources. Product time taken for limited resources. Next, cost per factory hour. First, return divided by cost. Next, you have to figure out return. Next, you have to figure out cost. Now, cost, total factory cost, very, very important. The total factory cost exclude what? Total factory cost exclude product cost. Exclude product cost. That is nothing but raw material. Except raw material, remaining all cost is there, na? What are the remaining all? Direct labor, variable overhead, admin overhead, selling overhead. That is called total factory cost. Factory cost. Next, divided with the total limited resources time available. The total limited time resources time available is nothing but in above calculation bottleneck hours. Next, throughput efficiency. Throughput cost divided by actual factory cost. Now, actual factory cost calculation, standard hours into cost per factory hour. Standard hours into cost per factory hour. Okay. Now, illustration number 16. Illustration number 16 gives a clarity. Factory has a key resources bottleneck of facility A which is available for 31,300 minutes per week. Budgeted factory cost and data on two product X and Y are the shows below. Selling price, material cost per unit, time facility. For 1 unit, 5 minutes. For 1 unit, 10 minutes. Budgeted factory cost per week. Budgeted factory cost. What is the logic I said for factory cost? Excluding material, remaining all. You can observe. He excluded. Are you got it? Now, total please. $78,250. Actual production during the last week is 4750 units, 650 units. If you multiply with time required, you will get standard hours. What is the full form for standard hours as per standard costing? Standard hours for actual output. Standard hours for actual output. Now, this is called estimated throughput cost. This is called actual factory cost. Actual factory cost. What is the efficiency ratio? Efficiency ratio. Throughput cost divided by actual factory cost. Now this is throughput cost. This is actual factory cost. No. Throughput calculation, cost calculation is there. I will explain. Now open your notes. What's the problem number? Now total factory cost. You already calculated, na? 78,250. Case 2, cost for factory minute. Why? Because throughput accounting ratio calculation is what? No, it's the, I think it's the requirements. What's the first requirement? See and tell me the question. Total factory cost. What's the second requirement? How to calculate cost per factory minute? Total factory cost divided by divided by total limited resources time available. Total resources time available. Now total resources time available calculation. 31,000. Bottleneck hours is how much? 31,300. Now you will get cost per factory minute. Next, you have to figure out return for factory minute. Now the formula for return for factory minute, throughput contribution divided by constrained minute per unit. Now what is the contribution per unit? Contribution per unit. Selling price minus direct material. 15 divided by constrained minute per unit. 5. Limiting factor. Next. Y. $35 minus 17.5 divided by limiting factor 17.5 per minute. Now you have cost per factory minute as well as return for factory minute. Now you will get what ma? Throughput accounting ratio. Return per minute divided by cost per minute. Now x 1.2 times, y 0.7 times. Don't multiply with 100. It expresses times. It expresses times. Case 4. Throughput cost per week. Now standard time for actual output into cost per minute. Now standard time for actual output we already solved. Actual units into time required. 4750 into 5, 650 into 5 summation. 30,250 minutes per minute. How much they are given? 2.5. Now you will get a throughput cost per week. This is a way to calculate throughput cost. Efficiency formula: throughput cost divided by actual cost. Efficiency ratio: throughput cost divided by actual cost. Throughput is 75,625 divided by actual cost 78,250. Now efficiency ratio always expresses percentage. Now how much efficiency the company is working? 96.65%. Are you guys clear? Now one more. Throughput accounting ratio equals to, how to calculate throughput accounting ratio ma? Don't by head the formula, understand the logics. Throughput accounting ratio is nothing but return of per factory hour or minute divided by cost per factory hour or minute. Now the thing is calculation of return per factory hour. Return per factory hour equals to throughput contribution divided by limiting factor. As per understanding purpose, but they provided terminology different. What the terminology they different? Constraint limiting factor or time required for factory hours, that kind of things they will use. But the understanding purpose we can use that like shortcut way. Are you got it? Next, cost per factory hour equals to total factory cost divided by bottleneck hours. Bottleneck hours. Okay. Next, if you know these two, we can calculate this one. Next, throughput cost calculation. throughput cost calculation. Standard hours for actual output into, you can go with the standard rate. Standard rate. Are you clear? That standard rate only I used a cost per factory hour. Cost per factory hour. For understanding, we can write like this. Okay. Now, total cost is there, throughput cost is there, actual cost is there. Now, efficiency. Throughput cost divided by actual cost. All done. So this is about throughput accounting. Okay. Backflush is not that much of important. If time permits, I will discuss within 10 or 5 minutes in last, but I will not skip. Okay. So afternoon we will start freshly standard costing. Are you okay? Trust me, I will give the best standard costing knowledge. Thank you. Any doubts regarding to throughput and just in time? Can you handle? Are you clear now? So first give a importance to concept, not problems. Thoroughly understand the concept first. After completion of the concept only, go with the pencil and material for calculation. So without knowing the concept, if you start the problems, చేసేటప్పుడు బాగానే ఉంటాయి, ఎగ్జామ్లో స్ట్రక్ అయిపోతావు. So they will mismatch the entire problem with one new point. That one new point will struck you. Now the point, if you know the concept, you will try for that adjustment. And second thing, don't use notes or material solutions at the time of calculation. If it's right or wrong, go with your own calculation. Then you will identify hundreds of mistakes. Then rectify each and everything. Why I did this mistake? Why I did this mistake? So you can take a lunch break. Okay, guys. So next chapter. Chapter 6. Evaluating performances. In this, they provided two units. Unit 6.1, variance analysis, and uniform costing. That variance analysis is nothing but, you already know, standard costing. Before entering into standard costing, exam point of importance. Forgot about the June 23. The next attempts. December 23, 14 marks. June 24, 14 marks, but 7 plus 7. December 24, 14 marks. June 25, 14 marks. Reconciliation problem, labor plus FOH problem, reconciliation problem, reconciliation problem. Very clear? If you want to solve reconciliation problem, first you have to know this, you have to learn sound knowledge regarding to individual cost variances and revenue variances called material cost variance, labor cost variance, FOH variance, and variable overhead variance, sales margin variance. Okay, I will give a clarity for one by one. So this is exam point of importance. When it come to standard costing, first you have to understand three words: budget, standard, actual. Budget, standard, actual. Why? Because lot of students are confusing in this area only. Sometimes they will use budgeted word, but they will consider it as a standard information. Sometimes they will use standard word and they will consider it as a standard information. There is a no issue with the actual. There is only issue with budget and standard. Can anyone tell me the meaning of budget and standard and actual? Budget, standard, actual. What we planned is known as budget. Are you guys clear? Next. What we allowed for calculation is known as standard. What we incurred is known as actual. Are you guys clear? When it comes to material cost variance, standard versus actual. Material labor variance, No. Labor variance. Also, we are using concept of standard versus actual. Variable overhead variance point of view, standard versus actual. But when it comes to FOH, we are using budgeted versus actual, standard versus actual. When it comes to sales, budget versus actual. When it comes to sales point of view, budget means standard only. The just name they changed for standard purpose, they will use budget is a word in sales variance point of view. Okay. Now, when it come to here, when it come to take an example, easy example to understand. So final preparation planning is nothing but budget. Final preparation planning is nothing but budget. So organization will give a timetable and revision exam schedules. That is called standard. What you implemented is known as actual. The simple logic. Are you guys clear? Now, when it comes to the budget, it talks about expenditure. That is nothing but it talks about total expenditure we planned. When the standard talks about predetermined rate per unit. Predetermined rate per unit. So the budget is talks about total expenditure and the standard talks about predetermined rate per unit. Are you got it, ma? So if you know the difference between these three things, then we can easily handle the entire chapter. So budget is a planned thing, standard is an allowed thing, actual is a incurred thing. That's why when it comes to the standard point of view, what are the information they given, we will convert that information to actual output. They will give standard information for standard output or budgeted output, but we don't want that standard information for budget or standard. We want standard information for actuals. Why? Comparison, here we all doing is a comparison. Comparison always did between two similars. Comparison did between two similars. Are you clear, sir? That's why even though the standard information for standard output, we will convert that standard information to actual output. Actual always shows actual output. Now the comparison between actual output of standard and actual is a concept of standard costing or variance analysis. Are you got it, ma? Okay, then fine. Next, when it come to what happening in this standard costing means, first we will create standards, eventually we will get actuals, at a time we will not get. First we will estimate. After estimation, at one point of time you will get actuals. When the actuals came, we will do comparison. The planned thing is happen or not. Now that is called variance analysis. After variance analysis, we will do reconciliation. Are you clear? In reconciliation, we identified there is a difference between planned profit and actual profit. Okay. For that, we have to do investigation. Investigation related problems also there, but the investigation is a key concept in CA final. Okay. In investigation, we will identify the reasons. Some are controllable reasons, some are uncontrollable reasons. After realize the reasons, we will fix again what? Standard. Again, eventually you will get actuals, variance analysis, reconciliation, investigation. It is a loop. This is the soul of the standard costing and variance analysis. Are you okay? Now, so this is a sufficient knowledge regarding to theory. Next, go with the concept with an example. Planned, actual. For some time, go with the planned is nothing but standard. Okay, don't think too much. The planned is nothing but standard. Another point you have to understand, responsibility. Now when it comes to standard costing, few managers are involved. The first manager name, production manager. Can anyone tell me the production manager is responsible for what things in our organization? What is the responsibility of production manager? He was responsible for material usage. He was responsible for labor efficiency. Have you got it? What's the responsibility, ma? Usage and efficiency. Next, purchase manager. Purchase manager. He was responsible for rates. Purchase rates. What purchase? Asset purchase? No. Here the entire standard costing deals about material, labor, expenditure, revenue kind of things. Now the rate relating to material. Next manager, HR manager or personnel manager. He was responsible for rate is not a right word here. Instead of rate, go with the prices. Now rate is a right word in labor point of view, rate per hour. Raw material point of view, price per unit. Are you clear? Now the HR manager or a personal manager is responsible for what, ma? Rates, labor wage rates. Next, cost accountant or top level management is responsible for expenditure. Responsible for expenditure. This kind of classification depends upon the organization size. Are you clear? If it's a large organization, they will assign for one manager for one department. If it is organization very low, production manager can act as a purchaser manager also. Production manager can act as a HR manager also. Guys, clear? So purely depends upon the size of the organization. Now, so after completion of CMA, what role you will get? Expenditure manager for manufacturing entity. Okay. Now first, I am planning for production of units. I asked my production manager. And I asked my purchase manager, both of them, how much is the cost is expected for manufacturing of 10,000 units of raw material. Now they said for manufacturing of 10,000 units, there is a chance of raw material cost is 10,000 rupees. They estimated. Are you okay? Based on their past experience and knowledge and skill, etc. Next, I called my personal manager and production manager again. How much can I expect for labor cost for 10,000 units of production? They said labor cost 8,000 rupees for 10,000 units of manufacturing. Now I called my cost accountant. I asked how much is a variable cost, variable overhead expenses. He said there is a chance of 10,000 of variable overhead. I called again my cost accountant. I asked, I forgot it in previous, I asked only variable overhead. I want estimation for fixed overhead. Now he said the fixed overhead is 15,000. This is my estimated cost. How much? Don't use brain, use calculator. How much ma? 43,000. Now for an example or assumption purpose, I am fixing selling price based on competitor. I am fixing selling price ₹50,000. Now what is the profit I will get for this planning? How much ma? Profit 7,000 is my expected. Eventually you will get what? Actuals. Now the raw material cost is 12,000. The raw material cost is 12,000. Now production manager and purchase manager said that don't worry, 10,000 is sufficient, they said at planning stage. But actually what happened? Increases or decreases? Increases. Multiple reasons is there for that 2,000 increment. Due to strikes, due to competition. Yes or no ma? That's the because of different reasons the 2,000 will be increases. Next, when it comes to the labor cost, 7,000. What happened? They said 8,000 is an estimation, but actually what happened? Is it possible? Yes, it is possible. If supply of labor is more in the market, at that time we can pay less wages. There is an increment chance is there as well as decreasing chance also there. Now for that understanding purpose, I taken one increased value, one is decreased value. Next, variable overhead 10,000. Variable overhead 10,000 actual. What happened? No change. No change. What they planned, actual also same. Now when it comes to FOH, 16,000. 16,000. Why 6,000 is increases? Multiple reasons is there. Can I take one of the reason? I recruited new employees. Salary what happened? Increases. Salary is nothing but FOH only, no? Yes or no, sir? Now this is the comparison of planned and actual. Now please tell me the actual cost. Actual cost 45,000. Same assumption, selling price remains constant, but due to sales also impact our profit as per concept. But in this example, sales remains constant assumption. Sales please. What ma? 15,000. 50,000. Profit please. Now this is the discussion. How much profit is impacted ma? 2,000 rupees profit decreases. Why 2,000 profit decreases means because of two reasons. Because of cost elements as well sales element, but in this example sales remains constant. Are you okay? Now when it come to here, the planned material cost is 10,000, the actual cost is 12,000. How much is impacted? 2,000 is impacted. What impact it's? Because of that impact, your profit will increase or decrease? Profit will be increase or decrease? Decrease. If your profit is decrease, that is called adverse. That is called adverse. If your profit is increases, that is called favorable. Don't follow minus answer adverse, plus answer favorable. You are not an inter student. Please understand the conceptual logics behind the calculation. Are you clear? If your profit is decreases, that is called adverse reason. If your profit is increases, that is called favorable reason. When it come to labor cost, 8,000 is planned, but actual how much amount is impacted? 1,000 rupees. Due to that amount, your profit increases or decreases? Common sense, if cost reduces means that amount impacted on profit. Now that 1,000 rupees, we are not using plus answer, minus answer, we are using just adverse or favorable. Are you clear? Now don't forget this logic. But we learn like that only, minus adverse and positive favorable, but that will confuse in FOH. That will confuse in sales. Are you guys clear? Next. Do you understand this concept? Now, can I name it for this 2000 is there now? Can I name it as a profit variance? Profit difference? Profit difference. Instead of difference, they used a word called variance. It's a professional word, that's it. Profit variance. Why this profit variance came? Because of two reasons. Because of cost variances, because of sales variances. Now when it comes to the cost variance, individual variance is there or multiple variance is there? Multiple variance is there. There is a chance of raw material, there is a chance of labor cost, there is a chance of variable overhead, there is a chance of fixed overhead. Material variance, labor variance, variable overhead variance, fixed overhead variance. Okay. Now when it comes to sales variance point of view, two types is there. Total point of view, profit point of view. Again, that profit point of view classified into two types. Absorption costing point of view, absorption costing system point of view, marginal costing system point of view. In morning class only we discussed the difference between absorption costing and marginal costing. Are you clear? Now you have to learn all those things. Material cost variance, labor variance, overhead variance, FOH variance, sales variance. In sales variance, you have to focus on total point of view as well as profit point of view. But reconciliation purpose, just profit is sufficient. I will give full clarity in reconciliation point of view. Okay. Now without late, I will start with concept number 1. Material variance. Now as per our example, how much is the difference? 2,000 rupees. 2,000 2,000 rupees. What is the calculation means? What you say? 10,000 minus 12,000. Now, can anyone tell me the name for 10,000? Planned material cost. I said, forget about the word planned. You instead of planned, assume that is a standard. That is called standard material cost. What about the 12,000? Actual material cost. Are you okay? Now, how to calculate standard material cost means standard quantity into standard price minus actual quantity into actual price. This is the way formula is came. Okay, so now, how much is the impacted value here? 2,000 adverse. Which persons are responsible for the 2,000 adverse? Both production manager involved and purchaser manager also involved. I called them to my office. I asked why these 2,000 adverses came. They said multiple reasons. Can I scold both of them? Can I scold both of them? Idane detacha? Detacha detakurda? No. Why? Because we have to identify, as a businessman, we have to identify who's the person properly responsible. కంపెనీలు మూతలు పడిపోతాయి, ఒక్కొక్క మీటింగ్కి ఒక్కొక్క బ్లాక్ క్లోజ్ అవుతుంది అట్లా తిట్టుకుంటూ పోతే. ఆర్ యు క్లియర్? నౌ I personally asked my production manager, go and check once your planning is right or wrong. Are you clear? Now the person of production manager is responsible for what, ma? Only quantities. Now here two reasons is there, either quantity or either price, sometimes both. Now first quantity check. Production manager. Now you have to identify difference in the quantity, difference in the raw material quantity. That is nothing but difference standard quantity minus actual quantity. Standard quantity minus actual quantity. Now this is not a amount, this is just units difference. I want amount. Why? Because this 2,000 is amount or units? Amount, na? How that difference convert as amount means if you multiply with the price. Now two prices is there, standard price is there, actual price is there. Which price I need to consider? Standard price or actual price? Why standard price? Because production manager don't know the actuals. He was only in the warehouse, he was only in the production house, he don't know the market values. That's why we multiply with what, ma? Standard price. Now when it comes to the depth of the formula, standard quantity into standard price minus actual quantity into standard price. Are you got it? Any doubt on this? Sure. Next, put a name for this. What we identified? Difference in the quantity, right? Now the name of this one is material. Instead of volume says it's finished good. Volume is a word for finished good. That's why instead of volume I am using usage. Quantity used. Material usage variance. Now when it comes to the price, who is responsible for this? Purchase manager. Now first he will check difference in the prices. What are the difference in the prices? Standard price minus actual price. But it is not an amount. If you multiply with quantity only, you will get amount. Now again I have a doubt. Actual standard quantity is there, actual quantity is there, which I need to consider? Standard quantity or actual quantity? Actual quantity I have to consider. Why? Because as a purchase manager, I know the actuals. I am in the market. As a purchase manager, I know the what? Actual rates and actual quantities. I don't know standard quantities. Now production manager will pass one order. Please purchase this much of units in the outside. Now purchase is nothing but actuals, na? Yes or no, ma? Now standard price into actual quantity. Standard price into actual quantity minus actual price into actual quantity. This one into this one into this one. Are you got it, ma? Clear? For example, the material usage variance is 1000 favorable. The price variance is 3000 adverse. ఇప్పుడు చెప్పు, తిట్టుండొచ్చా ఇంతకుముందు? ఇద్దరిని తిట్టుండొచ్చా? ఎవరిని తిట్టాలి? పర్చేస్ మేనేజర్. I need to scold purchase manager. So I need to price production manager. He uses his best. He uses his best. I said as per planning we need to use for 1 unit manufacturing 5 kgs. But he created that 1 unit with 4 kgs. That's why that 1000 rupees favorably came. I need to price, I need to give bonus to him. Are you clear? But when it come to this guy, bullshit guy, the planned rate per material per kg is 5 rupees, but he purchased at 7 rupees. He has a lot of ego and attitude issues. He will not ask discounts. Guys, clear? He need to spend 5 rupees, but he purchased at 7 rupees. The 2 rupees burden to him or company. That's why the 3000 adverses came. Are you got the concept? Yes or no, ma? Okay. $3,000 adverse, 1000 favorable. For this scenario, so we have to price purchase manager, we have to score production manager. Why? When it comes to the purchase manager, they need to purchase at 5 rupees. He purchased at 4 rupees. The planned rate is 5 rupees per kg, but they purchased at 4 rupees. What about that 1 rupee? Cost saving to the company. That's why I need to give bonus. When it comes to this bullshit guy now, he need to use for manufacturing of 1 unit 5 kgs, but he used 7 or 8 kgs. Now that the extra kgs he used, that is a cost to the company, yeah? Cost to the company. Cost increases. That is the adverse reason, na? Are you got it, ma? Now 1000 adverse, 1000 adverse. These are the possibilities we have. Okay? Now forgot about example 1, forgot about example 3. Come to example 2. Now continuously scolding my production manager. Then he stopped my scolding. He said, sir, it is not my mistake. I said there is a more than one raw material. A need to use 2 kgs, B need to use 1 kg. But they used reverse manner. A used 1 kg, B used 2 kg. Are you clear? For manufacturing of 1 unit, you have to use 2 materials. Material A, you have to use 2 kgs for 1 unit manufacturing. Material B, you have to use 1 kg for 1 unit manufacturing. That is a mix I fixed. But when it comes to the reality, the person who mixed that, he mixes in reverse. What is the reverse? A, 1 kg for 1 unit. B, 2 kgs for 1 unit. It is a wrong mix. Due to that mix, what happened? This 3000 adverses came. That is the explanation given by a production manager. Are you got it, sir? There is no discussion related to the price purchase manager. He was happy. But there is a sub discussion in where? Production manager point of view. That is a discussion name called material mix variance material yield variance. Material mix variance and material yield variance. If there is a only single raw material, production manager need to bear all consequences. If there is a more than one raw material, he will not bear. There is a chance of what? Mix issue. Are you clear? Now when it comes to the calculation point of view, if they provide a problem only single raw material, there is a no discussion of mix variance and yield variance. Only material cost variance, price variance, usage variance. If there is a more than one raw material, 5 variances is there. Cost variance, price variance, usage variance, mix variance, yield variance. Are you okay now? Now see. When it comes to the mix, revised standard quantity minus actual quantity. Revised standard quantity minus actual quantity. Now what is the actual mix? 2:1 na? But what the actual did? 1:2. Now you have to change that 1:2 into 2:1. The changing of mix is known as a revised standard quantity. Are you got it, ma? Now I identified mix variance, revised standard quantity minus actual quantity. Now it is not a rupees. How you get rupees? Into price. Which price? Standard price. Why? Because this also topic under production manager. Are you okay now? Now when it comes to yield variance, this is called balancing figure variance. Balancing figure variance. That is nothing but standard quantity minus revised standard quantity into standard price. Now I will give a clarity for this. There is a concept of reconciliation. Material cost variance equals to material price variance plus material usage variance. Now tell me the calculation part related to the material price variance. Standard price into actual quantity minus actual price into actual quantity plus usage variance, please. Standard quantity into standard price minus what, ma? Actual quantity into standard price. You can observe. What will cancel? What, ma? Names reversed, that's it. Standard price into actual quantity, standard price into actual quantity. Plus minus cancel. What's the pending? Standard quantity into standard price minus actual price or actual quantity. Actual quantity into actual price. Now what is the cost variance? Same only, no? Standard cost minus actual cost. That is a reconciliation. When you are calculating the problem, you have to check like this. You did right or wrong. The same logic. Material usage variance equals to material mix variance plus material yield variance. Now when it comes to material mix variance, please. Revised standard quantity into standard price minus actual quantity into standard price plus yield variance. Yield variance. Standard quantity into standard price minus revised standard quantity into standard price. Now what will get cancelled? Now what is the pending? Standard quantity into standard price minus actual quantity into standard price. What is the usage variance calculation? Same only now. Now that this is the way they came yield variance. Are you clear, sir? That's about material cost variance. Now note points you have to understand. Standard quantity is not equal to budgeted quantity. Standard quantity is different, budgeted quantity is different. But standard price is nothing but budgeted price. Standard price is nothing but budgeted price. Why? Because this is the name called predetermined rate per unit. How to calculate this? Budgeted cost divided by budgeted units. Budgeted cost divided by budgeted units. Next, SQ full form. Standard quantity for actual output. Even though they provided standard quantity for standard output, you have to convert that into actual output. Even though they provided standard quantity for budgeted output, you have to convert to actual output. I said why we need to convert for comparison purpose. Next, actual quantity. Here actual quantity means don't worry about the actual quantity for actual output. It always actual output related only. But the thing you have to understand in actual point of view, consumption. Actual quantity means what ma? Purchase raw material or consumption of raw material. Actual quantity means consumption of raw material. How you get a consumption of raw material? Opening stock of raw material plus purchase plus closing stock minus closing stock of raw material. Are you got it? In final standard they will ask this kind of concepts. Are you clear? Now another note point. Opening stock and closing stock need to value at standard price. Closing stock and opening stock need to value at what price ma? Standard price. Purchase stock need to value at actual price. Based on that only they created one problem. Opening stock and closing stock need to value at standard price. Purchase stock need to value at actual price. Why, sir, that opening stock, closing stock valued at standard price means for the purpose of accuracy. For the purpose of accuracy. If you valued at actual prices, you can't compare with the standard. You can't compare with the standard. That's why we used, even though it is an actual related information, we multiplied with the standard price. Are you okay? That's it about the material. Now open illustration number 8. add one more point. Revised standard quantity. Can anyone tell me the revised standard quantity? Actual quantity in, now that is not actual quantity, actual inputs. Are you got it? Actual input in standard mix. Actual input in standard mix. Then okay, start the problem. Right. SV Limited manufacture B by mixing 3 raw materials. For every batch of 100 kgs of BXC, 125 kgs of raw material are used. That is a clue we have. Now see, BXC is not a raw material, it is a finished good. Now the condition they specified, for every batch of 100 kgs of BXC, 125 kgs of raw material is needed. It means for 100 kgs of finished good, you have to use 125 kgs of raw material. Is the logic. Next, in April 2021, 60 batches were prepared to produce an output of 5600 kgs. Now my question, 5600 kgs is a what? 5600 kgs is a what? Of BXC. That is nothing but actual output. Actual output. Now 100 kgs of finished good for 125 kgs of raw material. For 5600 kgs of finished good, how much raw material will need? How much? 7000 kgs is required. Of individual raw material or total raw material? Total raw material. Can I name it is called standard quantity for actual output? This is a way to convert standard quantity for actual output. Now okay, then standard mix is given, actual is given. Now see, standard A 50%, B 30%, C 20%. Percent on what? 7000 kgs. Now standard price is there, actual mix is there. 60%, 20%, 20%. Actual price is there. Now quantity of raw material purchased. There is any discussion related to opening stock and closing stock? In question there is any discussion of opening stock and closing stock? Yes or no ma? You can observe only purchase is there. There is no opening stock, there is no closing stock. Can I assume purchase is nothing but consumption? There is no issue of that two last but two working notes. This is called material cost card. If you prepare like this, you can easily handle the entire problem. The preparation of cost card only difficult. On that cost card also, standard quantity calculation is difficult. Okay. Now, when it comes to the cost card, prepare like this only. Materials, standard quantity for actual output, standard price, actual quantity, actual price. If it is more than one raw material, you have to take another name called revised standard quantity. Yes, it is a more than one raw material. 3 materials is there. What are the material names? A, B, C. You will get input. Input less loss. This is called normal loss. There is no discussion of normal loss. You will get output. You will get output. Now, output of comparison between same output only, na? What output? Actual output. What is the actual output? 5,600 kgs. Then fill given information or available information. Standard quantity we have to figure out, but standard price directly is there. Now fill the standard price. Standard price, please. What more? 20, 10, 5. So actual quantity also we have to figure out. Actual price is there. Please tell. What more? 21, 8, 6. Now standard quantity for actual output. What is the clue they given, ma? For 100 kgs of finished good, they need 125 kgs of raw material. Now the actual output is how much? For 5,600 kgs, how much raw material is needed? 7,000 kgs. That is called input. Total input. Okay. Now the gap is known as loss. Just understanding purpose only I created that loss column. That is a not impacts your calculation. Sometimes that is a normal loss value is a clue for output calculation and input calculation. Okay. Now they said a proportion mix percentage, please. 50% of 7,000 kgs. 3750 kgs. A 50%, B 30%, C 20%. Please. 2100. 7,000 into 20%. How much? 1400. A 3,500. 3,500 kgs. Okay. Now when it come to actual quantity, generally all questions they will give actual quantity also, but here they are not provided. But they provided five thousand, 2,000, 1,200. These are what values? Purchase units. These all are purchase units. Here they said consumption. 60 batches were prepared to produce an output of 5,600 kgs. Now the actual quantity equals to 60 batches into 125 kgs. How much? 7,000, 7,500 kgs. This is called what? Consumption. Now tell me, purchase is needed, consumption is needed. Consumption. Actual quantity. 60 batches into 125 kgs. 7,500 kgs of inputs. Now here also they specified percentages. Now what are the percentages? 60, 20, 20. 60% on 7,500. 4,500 kgs. B 1500 kgs, C 1500 kgs. Now can I figure out revised standard quantity? Can I figure out revised standard quantity? Why? Why? Why revised standard quantity? You have to mix 50% of A, 30% of B, 20% of C. But what you followed? 60%, 20%, 20%. Wrong mix only, na? Now what is the right mix? Input 7500 kgs into 50% is the right mix. Input into 50%, not 50, 50, 30, yeah? 30% is the right mix. Input 20% is the right mix. Now tell me the revised standard quantities. 3750 kgs, 2250 kgs, 1500 kgs. Now total information in your hand. Now what they are asking? Material cost variance. How to calculate material cost variance? Standard quantity into standard price minus actual quantity into actual price. For A, for B, for C, you will get total. Now please calculate and tell me, ma. Speed up. For this problem only I will solve total. Remaining all I explain in the notes. Calculator good leda. Speed up. A. What Nana? A. So okay. Standard quantity please. 3500. Standard quantity. 3500. Standard price 20. Actual quantity. Actual price. Answer. Tell me the individual. Tell me the individual. 3500 into 20. 70,000 minus 4,500 into 21. 94,000. Now see, the planned cost is for A 70,000, but you actually incurred 94,500. What are the amount you will get is adverse. What is the answer? What ma? 25,000, 24,500. Now B, standard quantity. Open notes ra, notes lo untadi jodra, same cost card untadi jodra. Standard quantity 2,100. Standard price 10. Actual quantity 1,500. Actual price what ma? 8. Directly tell me the answer. 9,000. Adverse or favorable? Favorable. C 2,000 per unit. 1,400 into 5. Answer 2,000 adverse. The net is known as cost variance. Net please. 17,000 adverse, sir. The same logic for material price variance, material usage variance, material mix variance, and material yield variance. Open notes, I will explain in notes itself. Just to check the numbers, that's sufficient. How to calculate material price variance, ma? Difference in the price into actual quantity. 20 minus 20 minus 21, no? And 18 minus 8, 10 minus 8, 5 minus 6. Actual quantities, A 4500, B 1500, C 1500. You will get an answers. Now you can observe the planned rate price is 20 rupees, but you purchased at that 1 rupees increased cost, that is nothing but adverse reason. The planned is 10 rupees, but you purchased at the planned is 10 rupees, but you purchased at 8. 2 rupees saves to the company, favorable. Next, the planned is 5 rupees, you purchased at 6 rupees, 1 rupee extra cost, adverse. Now net impact adverse, adverse plus minus favorable, you will get 3000 adverse. Are you okay? Next, material usage variance. Difference in the quantity into standard price of 3500 minus 4500, 2100 minus 1500, 1400 minus 1500 into what prices? Standard prices 20, 10, 5. Now the plan to use is 3500, but how much you used? 1000 units you used extra, na? That is cost to the company, yeah? Adverse. 2100, 1500. The plant is 2100, but you used or produced with only 1500. Some units you saved for the company, favorable. 1400, 1500. The plant is 1400 kgs, but you actually used 1500. 100 kgs you used extra, na? Adverse. Are you okay? Now the net 14,500. If you sum these two, you need to get that cost variance. Sum these two. 17,000. When it comes to the material mix variance, how to calculate material mix variance? Revised standard quantity minus actual quantity. Why? Because mix is not properly there. Into standard price. Are you clear? Now same logic. As per revised, you have to use 3750 kgs, but actually used 4500 kgs of raw material. Extra used, adverse. Extra raw material, extra cost only, no? Next, 2250, 1500. Here you reduced the usage, that's why favorable. When it comes to the C, revised 1500, actuals also 1500. There is a no mix variance. Net 7500, adverse. Minus plus. Material yield variance. Standard quantity minus revised standard quantity of 7000, adverse. Now, second reconciliation. If you sum these two, you need to get that usage variance. Sum these two. 7500 and 7000 adverse. Now our problem is right. Okay. This is a basic version of material. Next. Last problem. I will stop today's session. Yeah. Illustration number 9. Put a 5 star. This kind of things you have to learn, sir. These are the questions they're asking in the exam. Not basic questions. A brass found foundry making castings which are transferred to mission shop. Standard costing point of view, some clerical errors will be there in your board book solutions. Follow the notes, it's a perfect solution made. Next, when it comes to the illustration number 9, a brass foundry making castings which are transferred to the mission shop of the company at standards in regarding to material stocks which are kept at a standard price are as follows. Standard mixture 70%, material C 30%. Wait. Standard mixture 70% of material C, 30% of material Z. They are using two types of material, material C and material Z. Standard price material 2400 per ton, 650 per ton. Standard loss in melting 5% of input. Okay. Next, figures in respect of costing period are as follows. Here the word of costings is nothing but good. Commencing stocks. The word highlighted the word commencing, that is nothing but opening stock. Commencing stock means what stock ma? Opening stock. The finishing stock means you already know. What? Closing stock. Purchase is also given. And purchased value is given here. This is called purchased value. Now, metal melted 400 tons, casting produced 375 tons. Can I name it as actual output? Actual output. Present figures showing material price, mixture, yield variance. I said one logic. Opening stocks and closing stocks valued at standard price. Purchased units valued at. Are you clear? Now when it comes to material C consumption, please. Material C consumption. Opening stock how much? 100 plus purchases minus closing stock. Consumption 2 tons. Material Z. Material Z. Consumption 60. Purchase. Closing. Consumption. Are you okay? Now, so see, I prepared a cost card for this problem also. First, actual quantity we calculated. What is the actual quantity? Consumption or purchase? Consumption. Okay, then fine. Standard prices are given. I posted. Actual prices is given. Actual price is given. Actual price is given. Where? 7,32,500 divided by 300 tons. 62,500 divided by 100 tons. What you will get? Purchase price. I want consumption price. Why? Because actual quantity is a consumption. Na? Do you understand the logic? If I use that purchase units, at the time I will consider purchase price. But I am not using purchase units. I am using consumption units. In that consumption units, opening stock is there, closing stock is there. Opening stock is there, closing stock is there. I said a logic. What the logic? This 100 units you have to value at a standard price. This 300 units you have to consider this 7,32,500. Are you got it? Are you clear, ma? That's why actual prices is not there in this problem. You can observe the notes. I named it as a working note. I named it as a working note. Now they provided mix. No, not mix. They said relating to the standard quantity mix 70%, 30%, 70%, 30% of what? Input. CZ. Standard quantity, standard price. Actual quantity, actual price. So standard quantity I have to figure out. Standard price 2400. For this 650. Actual quantity I figure out at 290. 1. Actual price I can't figure out here. Why? Because opening and closing stocks is there. I want inputs. Loss. You will get output. Now we know the output. What is the output? 375 tons actual output. How much more output? 375 tons. 375 tons. Here you will get a total input 290 plus 110. How much? 290 plus 110. 240 is the total actual input. Now they used a logic. What is the loss ma? 5% of input. Loss 5% means input always shows what percentage? 100%. Now what about the output? 95%. Now see, 375 tons equivalent to 95%. I want 100% inputs. For 100%, how much inputs is needed? How much ma? 416 tons. Now 416 tons into 70%, 416 tons into 30%. That is nothing but 100%. What ma? మరి ఏం చెప్తున్నారా? నిద్రపోతే క్యాలిక్యులేట్ చేస్తున్నారు ఏంట్రా? 375 into 100 divided by 95. How much? 395 tons. ఇలా క్రాస్ మల్టిప్లై అవుతుంది అది. 395 tons into 100 divided by 95. Now 395 tons into 70%. 276. Go with the round off, no issue. 276 tons. 30% pending. If you're round offing with the values, go with the balance value. 119 tons. This is a way to calculate standard quantity. Are you got it, ma? Next. Now I can't calculate actual price, but I can calculate actual quantity into actual price. For formula, this only you needed. Yes or no? For this problem, actual price calculation is not possible. That's why I'm calculating actual quantity into actual price. For material C. Opening stock valued at standard price. How much is the standard price? 2400. Plus purchase 300 units is there, na? Price is not there, directly value is there. Consider the value. What's the value? 7,32,500. 7,32,500 minus closing stock is there, na? 110 into 2,400. Now tell me material C actual cost. 7 lakh 8,500. Okay. Z. Opening stock, please. 60. Standard price 650 plus purchase cost is there. Directly take that purchase cost. How much? 62,500 minus closing stock. Standard price. Answer 69,000. Are you okay now? Now see this calculation. Standard input 395 tons. Standard input. Based on that only I applied 70%, 30%. I get standard quantity of C, standard quantity of what? Z. Standard prices they given. Actual quantity, actual input calculation. Opening stock plus purchase minus closing stock. So 290 tons, 110 tons. I posted in actual quantity. But there is no information of actual prices. But you can't take an assumption. Purchase cost per unit is nothing but AP. Not AP. AP has a separate calculation. Are you okay? Now, I figure out that actual quantity into actual price for material C and material Z. 7,08,500, 69,000. Now, what are the variances they're asking? We calculate in regular class all variances, but they're asked specifically. What are the specific variances they're asked? Price. Now, how to calculate material price variance? Standard price into actual. Don't use the shortcut formula here. Why? Because full information is not there. If full information is not there, go with the full calculation. Now, material price variance, how to calculate? Standard price into actual quantity minus actual quantity into actual price. That is the purpose we calculated this actual quantity into actual price. Are you okay? Standard quantity you know. Sorry, actual quantity you know. Standard price also you know. This can be calculated. This is a working note. Okay. Next, what is the specifically they're asked? Mixture variance. If you want a mixer, you have to create another column. Revised standard quantity. Now, what is the revised standard quantity calculation? Input 400 tons in standard mix. What is the standard mix? 70%? 7:3 ra? 70%. 400 tons into 30%. Revised standard quantity into standard price, actual quantity into standard price. This information is available. Shortcut is possible. Yield variance is also required. Standard quantity is there, revised standard quantity is there, standard price is there. This is a way to calculate this problem. The only point you have to identify in this case is actual cost calculation. Actual cost calculation. How to calculate actual cost? Actual quantity consumption into the value relating to the consumption. Unit cost related to the consumption. Now, what is the unit cost related to the consumption? Stocks are valued at standard price. Purchase units valued at purchase cost. Are you clear, sir? That's it. We will discuss remaining topics tomorrow. So these are the every point new thing we learning. Are you clear? So what is the problem we discussed in problem 10? That is a format for all material cost problems. Okay. So that means if you know that problem means you can touch the standard material cost. But in every problem they added one new point. That is important for final student. Based on that additional points they will create main problems for 14 marks. Okay.